Hello CMA final students. Now, yes, the most awaited video by all the CMA final group 4 appearing students for June 2026 examinations is Cost and Management Audit Bullet MCQs video. So here is the video for all of you. Firstly, let me introduce myself. This is CMA PARVATHI, your mentor for the subject of Cost and Management Audit in CMA final paper number 17. So yes, this is going to be the cost and management audit entire bullet MCQs video for June 2026 attempt students. Right now, before moving into the video, what all have been covered in this particular video? Yes, I have covered this entire PDF covers the MCQs of ICMAI study material, ICMA study material, ICMA MCQ booklet, past question papers till December 2025 examinations, mock question papers which has been also released for June 2026 examinations, and practice test paper which was released for June 2026 examinations. So all the MCQs which are there has been covered in this particular booklet. Now, how the MCQs are going to be there. Are we going to mix up all the MCQs and are we going to see that? The answer is no. We are going to cover the MCQs unit wise. Yes, unit wise MCQs will be covered. And the most important part is I am not only going to read the question and give you the solution of the MCQs, but also we are going to go conceptually. Yes, what is the concept behind that MCQ? We are going to have the understanding regarding that. Along with that, we are going to solve the MCQs as well. So it is going to be both MCQs as well as conceptual session. So this will give you the more benefit the day before your examinations when you're watching it. So I've given you the enough introduction about this video. Let us quickly go into the video. Before that, if any of your students are watching this video and wants to get this particular PDF which I'm using for this particular video, then yes, you can join the Telegram channel which is there for exclusively cost and management audit. The Telegram channel link will be given in the description box down below. This PDF has already been shared in the Telegram channel. You can go to the pinned files and you can download this PDF and get full benefit out of it. I hope it's clear. So let's get started. So let us start with section A, cost audit unit 1, basics of cost audit MCQs. Right. Now, the first MCQ, cost audit was first introduced in the year and the options which are given are 1959, 1965, 1949 and 1975. So this particular question has been tested from where? From the history of cost audit. If we see the history of cost audit, see the history of cost audit, not only this particular MCQ, but I have already told you in the history of cost audit, all the years are very, very important. From any of the year, the question can be tested. So if we see in 1965, the cost audit was firstly introduced through the sections, section 233B for the cost audit and section 2091 subsection D for cost records. So firstly, the cost audit was introduced in the year 1965. Later on, what happened? In 1965 to 2008, only 44 industries were covered. After that, in 2008, the government was not satisfied with that, because of which they have appointed an expert group was appointed in 2008 and they have done their analysis and gave their report in 2009. Expert group submitted their report. Then in 2011, mandatory cost audit for cost records has been bought, not for all but for manufacturing, mining and processing of operations based on turnover and net worth and compliance certificate. And in 2014, they have bought separately in Companies Act 2013 as Companies Cost Records and Audit Rules 2014. So Companies Cost Records and Audit Rules 2014 was issued under Companies Act 2013. So this is the entire history of cost audit. And the first MCQ which was tested is, when was cost audit firstly introduced? It was introduced in the year 1965. I hope it's clear. So the option B is right. Cost audit was first introduced in the year 1965. Moving on to the second MCQ. Cost audit was first introduced for which industry? In 1965, when the cost audit was firstly bought in, it was firstly introduced for cement industry. Yes, it was firstly introduced for cement industry. Now regarding this, there isn't any conceptually which was given, but yes, you have to remember it. Cost audit was firstly bought for cement industry, as government wanted to go for the accuracy of cost data and want to control the price mechanism which was there in that particular market in those period of time, in pre-independence era and post-independence era. That point of time, cement was the industry which was majorly handled by the government, they themselves. So they wanted to undergo the analysis of price mechanism under cement industry. So the first cost audit was introduced for cement industry. I hope it's clear. Then third MCQ. Government of India has issued order with respect to introduction of mandatory cost audit of cost records maintained by the companies in the year. We have just now seen that in the history of cost audit in the year 2011. Mandatory cost audit for cost records has been bought by the government. So the options are 2008, 2009, 2011 and 2014. What's the right answer? The right answer is 2011. I hope it's clear. Then, the report on the audit of cost records is submitted by the cost auditor to whom? Who will appoint a cost auditor? A cost auditor has to be appointed by board of directors. So, if you see section 148, so in section 148, it was clearly given in section 148 subsection 5 that the cost auditor has to submit their cost audit report to the board of directors. Who will appoint? Board of directors. To whom they have to submit their report? To the board of directors. And that was given in which section? It was given under section 148 subsection 5. I hope it's clear. So the report on audit of cost records is submitted by the cost auditor to whom? To managing director? No. To the finance director? No. To the audit committee? No. To the board of directors. And for that we have seen the explanation as well. Then moving on to the next question. Question number 5. The cost auditor of the company who is in default in compliance with section 148 shall be punishable in the manner as provided. Which means if the cost auditor is not complying with section 148, then what will be the default section? The default section is given under section 148 subsection 8. So we have total 8 subsections in section 148. And subsection 8 talks about the default section, which means if a company and officer of a company is not complying with any of the provisions which are stated from 148 subsection 1 to 148 subsection 7, then they will be punished under section 147 subsection 1. And if cost auditor is not complying with any of the provisions, then they will be punished under section 147 subsection 2 to 147 subsection 5. So this is two different penalty sections for officer and a company, and it is separate for cost auditor. For officer and company, it is section 147 subsection 1. Whereas for the cost auditor, it is section 147 subsection 2 to section 147 subsection 5. I hope it's clear. So, what are the options given? And they have asked for cost auditor. What is the provision for cost auditor? They will be punished under section 147 subsection 2 to section 147 subsection 5. 139 no. 1, 2, 3 of 148 no. 143 no. Subsection 2 to subsection 5 of section 147 of Companies Act 2013. Option D is right answer. Moving on to next option, question number 6. The appointment of cost auditor is defined under which section? As I have told you, section 148. In section 148, section 148 subsection 3 tells us that the cost audit shall be conducted by whom? By her cost accountant in practice, and that cost accountant in practice shall be appointed by the board of directors, which means regarding the appointment of a cost auditor, it was given under which section? Under 148 subsection 3. So the appointment of cost auditor is defined under section 148 subsection 3 of Companies Act 2013. I hope it is clear. Then moving on to 7th question. The Institute of Cost Accountants of India was set up in the year we have seen the history of cost audit. Similar to history of cost audit, we also have history of Institute of Cost Accountants of India. So in the year 1944, ICWAI has been established as a company, which is a public limited company under Companies Act 1913. Later on, in 1959, ICWAI has been established under a special act which is called as Cost and Work Accountants Act 1959. Later, in 2012, it was renamed to ICAI. So, priorly it used to be ICWAI. Now it is ICAI. So, when was the first establishment started? In 1944. And when it has been converted into a special act in 1959. When was it was renamed? In 2012. So what is the question? The Institute of Cost Accountants of India was set up in the year 1944. I hope it's clear. Then the cost accounting system was initially developed based on the recommendations of Dash Commission. So in the entire analysis or basics of cost audit, we have seen genesis of cost audit. What does it mean by genesis of cost audit? Nothing but the old history of cost audit, how all the cost audit has been bought up, everything. And we have seen about a famous corporate fraud case, which is Dalmia Jain Companies. Now, there was a famous fraud which was happened by them, which is Dalmia Jain Companies. And after that, to investigate that case, government has appointed whom? Government has appointed Vivian Bose Commission, followed by Datta Commission and Daftari Sastry Committee, which means firstly, which commission was appointed for investigation? Vivian Bose Commission. Later on, it was Datta Commission, and later on, it was Daftari Sastry Committee. So, the first commission which was appointed is Vivian Bose Commission. So, the cost accounting system was initially developed based on the recommendations of, initially it was based on Vivian Bose Commission. I hope it's clear. Then, the company and every officer of a company who is in default in compliance with section 148. I have told you, section 148 subsection 8 talks about the default section, and it gives us two punishable sections for two different people. One is for officer and employee of a officer and company if they are in default. If an officer in a company is in default, then they are punishable under section 147 subsection 1. If cost auditor is in default, then cost auditor is punishable under section 147 subsection 2 to section 147 subsection 5. So here they have asked about the company and every officer of a company, and the options will be 147 subsection 1. I hope it's clear. Then 10th MCQ, the Institute of Cost and Work Accountants of India was renamed. In 1944, it was established. In 1959, it was bought as a special act. In 2012, it was renamed. This we have seen in the history just now. So, it was renamed in the year 2012. I hope it's clear. Then, question number 11. Dash empowers the central government to specify audit of items of cost in respect of certain companies. Our entire section 148. What is section 148 of Companies Act 2013? Section 148 tells that central government to specify audit of items of cost in respect of certain companies, which means central government can specify how to do the audit in respect of certain cost related data to certain companies, and this was given to whom? To the central government. By whom? By section 148 of Companies Act 2013. So here they have asked us, Dash empowers the central government. Who has given the power to central government? Companies Act 2013. Through which section? Section 148. Section 148 of Companies Act 2013. I hope it's clear. Then, question number 12. Cost audit represents true and fair view of any of the product. Now, if we are going for a cost audit, then cost audit will give us about what? About cost of sales, about cost of raw material consumption, or about cost of production? None of the above. This you can find under the benefits of cost audit. See, under the benefits of cost audit, and this benefits has been given by whom? As per the International Federation of Accountants. They are telling that cost audit helps to ascertain whether organization records are maintained to give true and fair value of cost of production, cost of processing, cost of manufacturing, cost of mining, which means cost audit is done as a verification for the organization records to verify whether the organization's cost of production is giving true and fair view or not. So here we can blindly write that the cost audit represents true and fair view of any of the product related to cost of production. I hope it's clear. Then question number 13. Cost records are maintained on which basis? It's a very basic question. Not only cost records, any documents you take, which is related to finance, which is related to costing, anything. Cash basing system is not there in current generation. All the records are being maintained on accrual basis. So yes, the answer for this is also accrual basis. I hope it's clear. Moving on to next. 14th, cost audit should be conducted by a chartered accountant. Can a cost audit be conducted by a chartered accountant? For this, we can again go to section 148 subsection 3. In section 148 subsection 3, it has been clearly given that cost audit shall be conducted only by a cost accountant in practice who is appointed by a board of directors, which means only a CMA can be appointed as a cost auditor. Other than them, no one can be appointed, which means chartered accountant cannot be appointed as a cost auditor. Maybe, can be, cannot be appointed as a cost auditor. I hope it's clear. Then moving on to next. 15. Which of the following are the objectives for which the cost audit is undertaken? Why we are actually going for cost audit? We'll see the options first. To establish the accuracy of costing data. Yes, absolutely. To know whether the cost data is true and fair or not. That is nothing but the accuracy. Next, to ensure that the cost accounting principles are governed by the management objectives and these are strictly adhered in preparing cost accounts. Yes. What are cost accounts? Nothing but the cost information, cost records. How cost records have to be prepared? Cost records have to be prepared by following all the cost accounting principles, whether the principles are being followed or not. To verify that, we'll go for cost audit. Second point is also correct. To reduce the amount of detailed checking by external auditors if effective internal control audit system is in operations. Absolutely yes. Why we are going for internal audit? Why we are going for cost audit? Why we are going for financial audit? Inside itself, we are doing all these audits so that the external auditor will not come and question us why it is something like this inside the company. So we are trying to avoid the penalties from the external auditors or avoid the penalties from the government. To avoid that, we are doing audit for ourselves and we are verifying that everything is proper. So, the objective of cost audit is all of the above. I hope it's clear. Then, moving on to next, which of these is not typically an advantage of cost audit, which means one of that could be not related to cost audit. Now, what are the advantages? First, improvement in cost control and reduction of cost. Absolutely yes. Why we are doing cost audit? So that to know about the cost data, whether everything is being recorded properly or not. And in the scope of cost audit, we have seen that is cost audit done only to know about the accuracy of cost data? The answer is no. There is advantage which is far beyond that. What is the wider scope of cost audit? To know about the sale price and margin and to know about the wastages which are happening, to reduce the cost wherever it is possible. Now all these are also the scope of cost audit which we have seen. Yes or no? See, the scope of cost audit to have control over element wise cost, to determine sale price and margin, to support management decisions. 2. Provide standards and budgeting controls and improve efficiency, which means wherever it is required, we will try to minimize the cost and reduce the wastage as well. So we will able to control cost and reduction cost. Absolutely right. It is an advantage of cost audit. Moving on to next. Ensuring compliance with cost accounting standards. Yes, how cost records have to be maintained. Cost records have to be maintained on the basis of cost accounting standards, right? Guaranteeing profitability of the company. Cost audit is not done to know whether the company is in profits, whether the company is into losses. We are not concerned about it. We are not concerned about the financial terms, about the profit, loss, assets, liabilities. We are not concerned about it. We are only concerned about the cost information which is recorded by the company. So, this particular C point is not related to costing but related to financials. So, this is not advantage of cost audit. Guaranteeing profitability of the company? No. Then, last point, detection of inefficiencies and abnormal wastages. Yes. So, all the 3 points which are given other than the C point is related to scope of cost audit. I hope it's clear. Next, moving on to next. 17. Which among the following is not part of basic components, nature of cost audit? First, verification of cost records. Cost audit is nothing but verification of cost records. What is the first definition which we have seen for the cost audit? Cost audit is nothing but independent examination of cost records, cost statements and other related information of an entity with a view to express an opinion thereon, which means cost audit is nothing but verification of cost records. First point is yes. Evaluation of cost management system. Okay, we can take that as well. Evaluating about the costing system, evaluating about the management decisions. Yes. Detecting fraud relating to financial accounts. Do we actually analyze anything related to financials in cost audit? The answer is no. Cost audit is nothing but examination of cost records. Where did financial records come from? So the answer is wrong. Detecting financial accounts is not. Reporting on adherence to cost accounting standards. Yes, whether cost accounting standards are being complied or not. We'll see that as well. So which of the following is not part of the nature of cost audit? Detecting fraud relating to financial accounts only. I hope it's clear. 18th, which authority prescribes the product classification under cost audit applicability? Which means for cost audit applicability, we had product classification, which means regulated sectors, non-regulated sectors. This is related to mostly unit 2, but okay, you can give it here as well. Who has classified that regulated sectors and non-regulated sectors product classification for cost audit applicability? Is it ICMAI? The answer is no. It was done by Ministry of Corporate Affairs, MCA. That's why you can see in unit 2, wherever we see about the cost audit report and wherever you see that the final report has to be submitted to whom? To the central government through MCA portal, right? So wherever we come across the CG, we are talking about whom? MCA, government. So the answer is option D, Ministry of Corporate Affairs. Then the last MCQ of unit 1, basics of cost audit. 19th, cost information dash the organization to structure the cost, understand it and use it for communicating with the stakeholders. Will cost audit help? Will cost information help or doesn't help? Enables, disables, useful, none of this. Cost information enables the organization to structure the cost. So, if you just go with the sentence formation, it is enables. I hope it's clear. So, these are the MCQs which are there for unit 1 basics of cost audit. I hope it's clear. So let us start with our unit 2 of section A cost audit, which is companies cost records and audit rules 2014. Let's see the MCQs one by one. First, the applicability of cost audit under companies cost records and audit rules 2014 for regulated industries having overall annual turnover during the immediate preceding financial year is. So they have asked about cost audit, which means rule 4, applicability of cost audit. When we see rule 4, applicability of cost audit, here the turnover limits are classified into two different sections. One is for regulated sector and the other is for non-regulated sector. Now what is this regulated sector and non-regulated sector? The products or services which are covered, right? Now, if the products or services which are covered under regulated sector, if the company is manufacturing those regulated sector products, then from that regulated sector products, overall annual turnover during immediate preceding financial year should be more than or equal to 50 crores, and aggregate turnover of individual products and services from regulated sectors and non-regulated sectors should be more than or equal to 25 crores. So the question is about what? About the applicability of cost audit, and that too only for regulated sectors, and they have asked about overall annual turnover. So here for regulated sectors, applicability of cost audit, overall annual turnover during immediate preceding financial year should be more than or equal to 50 crores. I hope it's clear. It's 50 crores or more. Then moving on to next. The company has to upload CRA4 electronically. Now when I am saying this, only here in this particular MCQ, overall annual turnover has been tested. But in your examination, anything can be tested. Overall turnover should be more than or equal to 50 crores. Aggregate individual products turnover should be more than or equal to 25 crores. Whereas for non-regulated sectors, overall annual turnover should be more than or equal to 100 crores. And aggregate turnover of individual products should be more than or equal to 35 crores. I hope it's clear. Then moving on to next. The company has to upload form CRA4 electronically to the MCA under which rule of companies cost records and audit rules 2014. So if you see rule number form CRA4, I have given in rule 5. See here. This is our Rule 6 cost audit. In this entire Rule 6 cost audit, whenever we talk about filing form CRA4, company within 30 days from the receipt of copy of cost audit report shall furnish the cost audit report duly signed in form. In which form? In form CRA4. So form CRA4 talks about what? Filing of cost audit report which is given by the cost auditor to the company to the central government. So the company will file cost audit report to the central government in form CRA4, and that will be done in XBRL format. Company has to upload form CRA4 electronically to the Ministry of Corporate Affairs under which rule? Rule 6, sub rule 6 of companies cost records and audit rules 2014. So the rule is 6.6. So here it has been tested that the company has to upload CRA4 electronically to the MCA under the rule 6.6. I hope it's clear. Now moving on to next. The form in which cost records shall be maintained. So there are 4 forms which we have. Form CRA1 talks about maintenance of cost records. Form CRA2 talks about intimation of appointment of cost auditor by company to central government. Form CRA3 talks about cost audit report given by cost auditor to company. Whereas form CRA4 talks about filing of cost audit report by company to central government. So we have form CRA1. What is form CRA1? Form CRA1 is maintenance of cost records. So here the form in which cost records shall be maintained is form CRA1. I hope it's clear. Next, moving on to the fourth. Which of the following type of electricity company is under the purview of regulated sectors? Which means in regulated sectors table, what all we have, we'll see that. So yes, see here, regulated sectors, what all are there in regulated sectors table? Telecommunication services, generation, transmission, distribution and supply of electricity, petroleum products, drugs and pharmaceuticals, fertilizers, sugar and industrial alcohol. All these are the industry or sector or product or services which are covered under regulated sectors. So what is the MCQ question which was given? Which of the following type of electricity companies under the purview of regulated sector? What all are covered? Generation, transmission, distribution and supply of electricity. So if you see generation, transmission, distribution and supply of electricity, the answer is all of the above. I hope it's clear. The answer is all of the above. Next we'll see the fifth question. Question number 5. Which one of the below is not a regulated sector? So if we see the again regulated sectors table, telecommunication services, electricity, petroleum products, drugs and pharmaceuticals, fertilizers, sugar and industrial alcohol, all are into regulated sectors. So what are the options which is not there in this? Telecommunication, yes. Electricity, yes. Drugs and pharmaceuticals, yes. Automobile. Automobile is not there in the regulated sectors. I hope it's clear. Then we'll move on to the sixth MCQ. Any casual vacancy in the office of a cost auditor, whether due to resignation, death, or removal, to be filled by the board of directors within how many days of occurrence of such vacancy. So if you see rule 6 talks about cost auditor. So in entire rule 6, we study how the cost auditor should be appointed and when they should be appointed and all. We'll see that. So if you see here, company within 180 days from the commencement of financial year shall conduct a board meeting in which cost auditor has to be appointed by passing a board's resolution through board of directors, and after that the company has to intimate it to the central government in form CRA2, and that too there is a time limit within 30 days of board meeting in which the appointment was made, or within 180 days from the commencement of financial year, whichever is earlier. Why I am discussing all these limits? Because any of these limits can be tested as MCQs. It doesn't mean that only those MCQs can be repeated again. No, conceptually also MCQs can be tested. Okay, so in form CRA2, the intimation will be made. And after that, can they resign from office? The answer is yes. Can they be removed from office? The answer is yes. Then, if the cost auditor position becomes vacant because of any other reason, because of death, insolvency, removal, resignation, then it will be a casual vacancy. And casual vacancy shall be filled up by the board of directors within 30 days. So if you see the options, the casual vacancy has to be filled by the board of directors within how many days? 30, 60, 90 and 7. The answer is 30 days. I hope it's clear. Then moving on to 7th MCQ, cost audit report is to be filled in form dash on the MCA portal, which is cost audit report. So we have 4 forms: CRA1, maintenance of cost audit, cost records, sorry. Form CRA1 is maintenance of cost records. Form CRA2, intimation of appointment of cost auditor by company to central government. Form CRA3 is cost audit report filing by cost auditor to the company. Here in the question, it has been asked as cost audit report to be filed in which form? To the MCA portal, which means cost audit report is being given in XBRL format to the government. It shall be given in form CRA4. I hope it's clear. If there is any disturbance, I'm extremely sorry for that. Please bear with me. I guess there is some kind of dog barking disturbances. Excuse, okay? Because I'm trying to control it. It's not happening from the morning. Excuse for that. Now, CRA1. What is form CRA1? Is maintenance of cost accounting records. So, form CRA1 pertains to cost accounting records, cost accounting standards, financial accounting records, secretarial records. It is cost accounting records. The answer is option A. I hope it's clear. Then question number 9. In cost audit report, general information is reported in. So if we see, cost audit report is given in which form? It is given in form CRA3. Right. Form CRA3. Now if we see form CRA3. Now if we see form CRA3 is annexure to cost audit report, and this will be filed by whom? By the cost auditor to the company. And form CRA3 has how many parts? 4 parts. Part A, general information. Part B is for manufacturing sector. Part C is for service sector. And part D is for other related statements. Okay. So if you see here, general information is given under which? General information is given under part A. And that too in part A. What is there? General information about the company will be there. After that, it will be general details of a cost auditor. After that, it will be cost accounting policy. And after that, it will be product or service related details. So here I have given 3. But actually, if you see in the form which I have showed you, in that form, first there will be general information about the company, then general details of the cost auditor, then cost accounting policy, and then product or service details will be there. So here general information about the company will be there in part A first. I hope it's clear. In part A1, general information will be there. If they have asked about the general information of a cost auditor, then it is in part A2. Okay. If they are asking about cost accounting policy, part A3. If they are asking about the other thing, product or service details, then it is part A, fourth point. I hope it's clear. Now, 10th, serial number dash of table B. Table A is regulated sectors, table B is non-regulated sector. Cover companies engaged in health services. So, majorly health services are covered under which particular point under table. So, if you see health services, it is covered under 22. So 22, it talks about health services. So I asked to the students to just give a book reading about the non-regulated sectors table, which means you need not by heart it, but yes, a question can be tested from there as well. So health services is given under point number 22. So health services is given under point number 22. I hope it's clear. Then moving on to next, every company shall file a notice of appointment of a cost auditor with inform. Told you again, notice of appointment, which means form CRA2 is what? Intimation of appointment of cost auditor by company to central government. So here they are asking about the notice of appointment of cost auditor, nothing but intimation by company. It has to be done in which form? In form CRA2. Next, part C of annexure to the cost audit report in CRA3 deals with part C. So we have seen already form CRA3 has how many parts? It has 4 parts in it. What are the 4 parts? Part A talks about general information. Part B talks about manufacturing sector. And part C talks about service sector. So they are asking about part C of annexure to the cost audit report in form CRA3. It talks about service sector. I hope it's clear. Next, question number 13. A company which is engaged in construction business is covered under company's cost records and audit rules 2014. Yes, absolutely it is covered, and construction business is covered under table B, which is non-regulated sectors. Okay. Construction business is covered under table B, non-regulated sectors. Now, construction business does not include what? Outsourcing by a subcontracting company, a company working on BOT, build, operate, transfer mode, a company working in special economic zone, a project undertaken as EPC, which is engineering, procurement, construction contract. Now, among this all, which the among is not covered in company's cost records and audit rules, they are asking that. Now, if you see, we have in rule 3 and rule 4 exemptions. In rule 3 and rule 4, we have exemptions. Now, rule 3 talks about what? Cost records, right? Rule 3 talks about cost records. And for cost records, we have 2 exemptions. One, if a foreign company having only a license office in India, then cost records need not be maintained. Then the other point is that if they are into a micro enterprises or small enterprises according to MSMED Act, then micro enterprises and small enterprises need not maintain cost records. Now, these are the exemptions which are there for rule 3, applicability of cost records. Whereas coming to rule 4, applicability of cost audit. For that, we have how many exemptions? We have 3 exemptions for it. First, if the revenue from exports is more than 75% of total revenue, then those entities need not go for cost audit. Then, if a company is located in special economic zone, and third, if it is into a generation of electricity, and if they are doing a captive consumption, if they have a electricity generating plant and if they are going for captive consumption, then they also need not go for cost audit. Now, these are 3 exemptions which we have. Now, if you see all the exemptions, in all the exemptions, what is covered here? It is covered about the special economic zone. So, special economic zone is not at all covered under company's cost records and audit rules 2014. We can take that. A company working in special economic zone. Now, if a company is working under special economic zone, rule 4 is not applicable. Rule 3 is applicable for them. But here, as the option is given as such, we are doing that. It doesn't mean that entire company's cost records and audit rules is not applicable to them. No. If rule 3 is satisfied, rule 3 is applicable for them. I hope I have given you the clarity. Now, moving on to the next question, question number 14. A manufacturing unit showed during the financial year 2016 and 17, the following financial data. Okay, net sales is how much? 1250. Work it out along with me. 1250 is the net sales. Then export incentives. What do we do? Export incentives, and here they have asked about the value addition calculation. Okay, we'll take the sales, and for the sales we'll add export incentives, which is 85, and then other income. Do we consider other income in value addition? The answer is no, will not consider it. And adjustment of finished stock. We'll do the adjustment related to stock. Here they have directly given plus 95. So we are doing plus 95. Okay. Next, after doing this, what we'll do? Less cost of bought out inputs. Yes or no? Now, in this cost of bought out inputs, what is given to us? Materials is given to us. So, we'll take materials 634 minus salaries. Do we consider salaries in value addition? No. It will be taken in earnings, distribution of earnings to different claimants. Okay. Next, overheads. Do we consider overheads? The answer is yes. Overheads are also a cost to the organization. So, overheads is 101 minus 101. Then tax is given to us. So, we'll not directly take tax because tax is also distribution of earnings to different claimants. Tax will be paid to the government. So, from the earnings, we'll pay it as a tax. So, that also will not be considered. I hope it is clear. So, if we take the calculator and do the calculation, 1250 plus 85 plus 95 minus 634 minus 101. The answer is 695. So, the answer will be 695, option B. I hope it is clear. I know there is a lot of disturbance. I'm extremely sorry for that. Now moving on to the next MCQ, MCQ 15, item appearing only in the cost records, which means it is not there in the financial accounts, but only in the cost information, which is cost records. What options are given to us? Profit on sale of assets. Now, profit on sale of assets, isn't that recorded in profit and loss account? Isn't that recorded in financial accounts? Yes, in financial accounts it is included. Moving on to next, interest received. Will interest received not be there in the financial accounts? Yes, it will be there in financial accounts as well. Loss on sale of assets. Profits, losses, assets, liabilities, interest, everything will be there in the financial accounts as well. Now, moving on to the next, notional interest on capital. Now, what does it mean by notional interest on capital? Notional interest on capital is also called as imputed cost. Now, we would have listened to this word when we were discussing about the cost accounting standards, right? Now, imputed cost, what does it mean by imputed cost? This is not the actual cost which was incurred by the organization. Like owner's capital or owner's salaries, these are considered as imputed cost. This will not be there in the financial accounts, but this will be included in the cost records as cost information. So, this particular notional interest on capital will only be there in the cost records. This will not be there in the financial records. I hope it's clear. Now, moving on to next, MCQ 16. As per Part D, Para 4 of Companies Cost Records and Audit Rules 2014, value addition and distribution of earnings are to be computed based on. Now, regarding this MCQ, there is a lot of confusion among the students. Let me give you a clarification clearly. Now, according to that, value addition and distribution of earnings will be calculated based on what? Audited financial data, unaudited financial data, cost records data, both A and B. Now, the actual answer is both A and B. Value addition and distribution of earnings can be calculated based on audited financial data and based on cost record data as well. Okay, so if you see the information, cost of bought out inputs, whatever we see, right? Now, those cost of bought out inputs are also the cost record data, right? Cost information, those are cost information. And when you take the sales, export incentives, adjustment in opening stock and closing stock, those are in financial data. So, both financial data as well as cost record data, both are considered when you calculate the earnings available for distribution. When you take the tax, when you take the interest which is paid to the working capital loans, when you take the interest which is paid to the fixed loans, all these are financial data as well as cost data, right? So, the actual answer is both A and B, not only the audited financial data. I hope I have given you the enough clarification. But yes, According to ICMAI, they have given both the options. At one place, they have given audited financial data. At the other place, they have given cost records data, but the actual answer is both A and B. I hope it's clear. Moving on to the next MCQ, MCQ 17. Before submission to the auditor for the report, the form CRA 3 should be signed by. This is very, very important. Form CRA 3. I'll open form CRA 3. Just a moment. Now, see here. Before submission to the auditor for report, the form CRA 3 should be signed by. Actually, form CRA 3 should be signed by whom? It should be signed by the cost auditor, and it should be signed by one company secretary, one director who's having their membership or their DIN, director identification number, should be given. So it should be signed by company secretary and one of the directors. I hope it is clear. So here the secretary and the chief financial officer of the company, the answer is no. The secretary and the cost accounts officer of the company, the answer is no. The secretary and one director of a company, the chief financial officer and managing director of the company. So form CRA 3 should be signed by whom? Cost auditor, one secretary and one director. If company secretary is not present, then two directors have to sign the form CRA 3. I hope it is clear. So the answer for this question will be option C. Now moving on to the next question. ORS Limited, a multi-product company having annual turnover of 103 crores. Okay. Table A items under Caro being 26 crores. Table B is 8 crores and the rest are covered in either of the tables. Cost audit will be, whether the cost audit will be applicable or not. Now, if we have to go for the application of rule 4 here. Okay. Now, what is the application of rule 4? Applicability of cost audit. Now for this we have two different segments. One is the regulated sector and the other is non-regulated sector. Now for regulated sector, how much should be the overall annual turnover? Should be more than or equal to 50 crores. Is the first, whatever the criteria is there, is it satisfied? How much should be the overall annual turnover? Overall annual turnover should be more than or equal to 50 crores. Is it satisfied? The answer is yes. Along with that, it should also satisfy aggregate of individual products turnover. Aggregate of individual products turnover should be more than or equal to 25 crores in the immediate preceding financial year. What does it mean by aggregate of individual products turnover? Aggregate of table A and table B products. If we take 26 plus 8, 26 plus 8, it is coming to 34 crores. Which means it is coming to 34 crores. Is it more than 25 crores? The answer is yes, which means both the provisions or both the limits for regulated sector has been satisfied, which means cost audit has to be done for table A products. Clear so far? Now, moving on to the second provisions, non-regulated sectors. For non-regulated sectors, overall annual turnover should be more than or equal to 100 crores. Whereas aggregate of individual products turnover should be more than or equal to 35 crores. Okay. Now, what is the overall annual turnover? Is it more than 100 crores? The answer is yes. First one is satisfied. Now, and which means both the provisions should be satisfied in non-regulated sector. What is the second provision? Aggregate of individual products turnover. What is the aggregate turnover here? 26 plus 8 is coming only to 34, which is less than 35 crores, which means the two limits which we have for non-regulated sector is not satisfied. The limits which we have for regulated sectors is satisfied, which means cost audit should be maintained only for table A products alone. I hope it's clear. Not applicable to the company. No, it is applicable. Applicable for table A products only. The answer is yes. Applicable for both table A and table B. No. Applicable for all the products. The answer is no. It is applicable for table A and sorry, it is applicable only to table A products, and the answer is option B. Applicable for table A products only. I hope it is clear. Moving on to next, the abridged cost statement need not be separate for abridged cost statements. Each product with separate CTA heading, each product having separate industry specific expenses, each product having different unit of measure, self or captive consumption of each product. Abridged cost statements is nothing but the cost statements which we prepare in form CRA 4. In form CRA 4, we have abridged cost statements as well. Okay. Now, it has to be prepared for the each product separately. It has to be prepared for each industry separately. It has to be prepared for each different unit of measure separately, whereas it need not be prepared separately for captive consumption products. I hope it is clear. Okay, so this is about the cost statements. Cost statements will be prepared normally, right? Now, if we are going for self consumption from the production, we are taking it something for us. Now, for that, separate cost statements need not be maintained. I hope it is clear. So, for self or captive consumption of each product, abridged cost statements need not be maintained separately. I hope it is clear. Moving on to next MCQ. 20. Profit reconciliation of a company as a whole is dealt in. This is very, very important. Being tested again and again. In Form CRA 3, we have Part D, right? In Part D, this is para 1, this is para 2, 3, 4, 5 and 6. We have 6 paras, right? Para 1 talks about what? Product and service profitability statement. Para 2 talks about profit reconciliation. Para 3 talks about value addition and distribution of earnings. Para 4 talks about financial position and ratio analysis. Para 5, related party transactions. Para 6, reconciliation of indirect taxes. So these are the paras which we have in Part D. Now, what is the question? Profit reconciliation of the company is dealt in which para of which part? Part D is okay. But in Part D, it is covered under para 2. That is important. Part D, para 2 of the annexure to the cost audit report. This you have to remember clearly. Para 2, profit reconciliation. Para 3, value addition and distribution of earnings. And para 4, financial position and ratio analysis. I hope it's clear. Next, moving on to 21. Table A, regulated sectors for the purpose of maintenance of cost records under CCRA rules include telecommunication, electricity, petroleum products, drugs and pharmaceuticals, and what? Sugar and industrial alcohol. If you see again here, this is why I ask you to remember the regulated sectors, whatever it is there. Telecommunication, electricity, petroleum products, drugs and pharmaceuticals. Fertilizers, sugar and industrial alcohol is not there here, right? Telecommunication, electricity, petroleum, drugs and pharma, fertilizers and sugar and industrial alcohol. Now, arms and ammunitions, sugar and industrial alcohol, arms and ammunitions is not there in regulated sector. Fertilizers, sugar and industrial alcohol? The answer is yes. Aeronautical services, port services, not there in regulated sector. Fertilizers and railway, not there in the regulated sector. So the answer is option B. Fertilizers and sugar and industrial alcohol. Clear? Next, 22. Every company under the Company's Cost Records and Audit Rules 2014 shall maintain cost records of its product and activities as to facilitate calculation per unit of cost of production, unit of cost of operations, unit of cost of sales and margin, either of A, B and C. The answer is cost of production. Cost records and cost audit is maintained for what? For cost of production, right? For calculating per unit cost of production, we are doing or we are maintaining cost records. I hope it is clear. Sorry for here. Every company under the Company's Cost Records and Audit Rules 2014 shall maintain cost records of its product and activities as to facilitate calculation per unit cost of production, per unit cost of operations, and per unit cost of sales and margin. By maintaining cost records, we'll be able to know about our unit cost of production, unit of our operations, unit of our sale price and margin. So the answer is either of A, B, and C, or it could be all of the above. So the answer is either of A, B, C. I hope it's clear. Next, question number 23. As per Rule 4 sub 3 of Company's Cost Records and Audit Rules 2014, the requirement for cost audit shall not apply to the company whose revenue from exports and foreign exchange exceeds dash percentage of total revenue, even though it is not covered. It is covered in Rule 3. Which means Rule 3 talks about applicability of cost records. Rule 4 talks about applicability of cost audit. In Rule 4, we have 3 exemptions. First exemption, if revenue from exports, which means foreign exchange revenue, is more than 75% of its total revenue, then it need not go for cost audit. That question has been tested here. So the answer is 75%. I hope I have given you the clarity. Yes, for few MCQs, backside whatever I have given as the answer is wrong. you can rely on this particular video and correct the MCQs. I'm verifying everything properly according to the resources and giving you the proper and correct justification for each and every solution. Okay. So 23 is 75%. I hope it is clear. Next, 24. Disclosure of transactions with the related parties under para 5 of annexure to the cost audit report to be made for each related party for the year as a whole, for each product or service for the year as a whole, combination of A and B above, combination of A and B transaction wise. For this, I'll open where this I have given you. So, if you see here, when we were discussing form CRA 1, I have told you the two headings are important for you to remember. One is capacity determination heading and the second is related party transactions heading. Now in this heading number 24, related party transactions, after seeing everything about the related parties, at last I have given you a point. Disclosure of transaction. Excuse me. Disclosure of transaction with the related parties that annex to the cost audit report to be made for each related party for the year as a whole, for each product or service for the year as a whole as well. So, the option which is given here is for each related party for the year as a whole, the answer is yes. For each product or service for the year as a whole, the answer is yes. Combination of A and B above. Should it be done for transaction wise? The answer is no. It need not be done transaction wise. For each and every related party, we have to make it. For each and every transaction, it need not be maintained. I hope it is clear. So the answer is option C, combination of A and B above. I hope it is clear. Then 25, sugar and industrial alcohol belongs to which sector? We have seen telecommunication, electricity, sugar and industrial alcohol, fertilizers, petroleum products, everything is covered under regulated sectors. So, sugar and industrial alcohol is covered under regulated sectors. I hope it's clear. Then moving on to next. 26. Machinery used in defense, space and atomic energy sector and fulfilling turnover criteria is under defense, space, atomic energy. Did we come across this in regulated sectors? The answer is no. In regulated sectors, what is there? Electricity, petroleum, telecommunication, drugs and pharmaceutical, fertilizers, sugar and industrial alcohol. Machinery, mechanical appliances used in defense. Machinery used in defense. Machinery which is used in defense, atomic energy. Where is that? It is not coming. Nah, this is only machinery and mechanical appliances used in defense, space, atomic energy. It is covered under non-regulated sectors. I'm extremely sorry for that. Okay, it is non-regulated sectors. Now moving on to next. CCRA rules 2014 is applicable from the financial year commencing on or after. Regarding this also students have a doubt. I'll give you a clear-cut clarification about it. CCRA rules 2014. Now why students have confusion among this is that when we were discussing rule 1 title and commencement. In Rule 1 title and commencement, it is told that Companies Cost Records and Audit Rules 2014 is the title and the commencement date is 30th of June 2014. Yes, absolutely right. The commencement date is 30th of June 2014. So, every one of you thinking that the answer should be 30th of June 2014. But did they ask only about the commencement date? The answer is no. They have asked from which financial year on or after this becomes applicable, which means it is not related to Rule 1, it is related to Rule 5, maintenance of cost records. Companies, its branches, its units shall maintain cost records for each and every financial year on or after 1st 4 2014. So, from the financial year 1st of April 2014, on or after from that, each and every company which is coming under this particular company's cost records audit rules 2014 shall maintain cost records. So, it is not from rule 1, the MCQ is from rule 5. I hope it is clear. So, the answer for this is 1st of April 2014. I hope I have given you the enough clarity about it. Moving on to next, and in the same question they can ask you related to non-regulated sector products as well. So not for every product it is from 1st of April 2014. For few products, it is from 1st of April 2015, like coffee and tea, milk powder, electrical, electronic machinery, it is 1st of April 2015. So this can also be tested as MCQ. Okay, now moving on to next. 28. The central government released the CCRA rules 2014 in pursuance to the powers vested within which section? Companies Cost Records and Audit Rules 2014 has been what along with related to section 148, that we everyone know, but there is also another section which is related to it, which is section 469. Okay, section 469 also gave the power to central government to make the changes in Companies Act. Section 148 specifically gave power to central government to specify related to audit. So, the power which is vested with the central government is under section 469 as well as section 148. I hope it is clear. So, in our entire syllabus, we only talked about section 148, but there is also another section through which central government has the power to make changes, which is section 469. I hope it is clear. So, the answer for this is not only section 148, it is also section 469. I hope it is clear. Remember this very clearly. Now moving on to next. Question number 29. The CCRA rules 2014 supersedes Companies Cost Accounting Records 2014, Companies Cost Audit Rules 2014, Companies Cost Audit Rules Report Rules 2011, Cost Accounting Records Telecommunication Industry Rules 2011, all of the above. Now, it supersedes all of the above. Companies Cost Records and Audit Rules 2014 supersedes all of the above. So, the answer will be option D, all of the above. I hope it is clear. Then, question number 30. The CCRA rules 2014 is not applicable to Companies Cost Records and Audit Rules, not applicable to, which means they are asking about the exemptions. Here we will only consider the exemptions of Rule 3. Ma'am, why not Rule 4? Now, what is Rule 3? Applicability of cost records. If cost records itself is not applicable, there is no need of cost audit itself, right? If cost records are there, then we'll go for cost audit. So, if Rule 3 itself is not applicable, entire cost company's CRA rules is not applicable to it. So, they are asking about the entire CCRA rules 2014 applicability. So, we'll only check about Rule 3. Now, what are the exemptions for Rule 3? Foreign company having a license office in India. And the second is micro enterprises and small enterprises according to MSMED Act. So, here they have given about MSME, export oriented units, private limited company and units operating from SEZ. Unit operating from SEZ is the exemption for Rule 4, not for Rule 3. Even if Rule 3 is applicable for SEZ, SEZ has to maintain cost records. I hope it is clear. So, for this, the major answer is MSME. I hope it is clear. Next. Which one of the below is not a regulated sector? Again, it is being repeated. Fertilizers, aluminium, sugar, petroleum products. Fertilizers, sugar, industrial alcohol, petroleum, electricity, everything is regulated sectors. Aluminium is not a regulated sector. So, the answer is option B. Next, 32. For regulated sector, cost audit requirements has been made subject to turnover based on threshold limit. For regulated sector, cost audit requirement is made of which turnover limit, which means regulated sector, cost audit, overall annual turnover should be more than or equal to 50 crores. They haven't asked about the individual products turnover. They have asked about the subject to turnover threshold limits, which means 50 crores. I hope it is clear. Then, moving on to next. Details of materials consumed in 2A for manufacturing sector. In Form CRA 3, they are asking. Form CRA 3 Part B talks about what? Manufacturing sector, right? Is to be reported in which part of Form CRA 3? This is what we have discussed. Part A, general information. Part B, manufacturing sector. Part C, service sector. And Part D, other related statements. So, manufacturing sector is given under Part B of Form CRA 3. I hope it is clear. Then, question number 34. Identification of cost centers are to be reported in general information, general details of cost auditor, cost accounting policy, value addition and distribution of earnings. For this, I have to open Form CRA 3 for you guys. So see here clearly, along with explanations, I'm trying to give it to you. In Form CRA 3, we have Part A, which is related to general information. And in general information, we have cost accounting policy. In cost accounting policy, there is identification of cost centers or cost objects and cost drivers. So identification of cost centers is given under cost accounting policy under Part A, general information. So either you can write Part A, general information, but here separately cost accounting policy is given to us. So we can write it as cost accounting policy. I hope it is clear. So why the option I am choosing? I am giving you with the clarity so that even the options are wrong, believe in this because with the justification it is given. Okay. So identification of cost centers has to be reported in cost accounting policy. I hope it is clear. Then question number 35. Value addition and distribution of earnings are to be reported as per production records, utility records, human resource records, financial records. Either it should be related to cost records or either it should be related to financial records. Why it is HR records, utility, production? No, it is financial record. I hope it is clear. Then related party transactions are to be reported for cost centers, product, plant, company. Related party transactions should be reported for. It should be reported for each and every company. I hope it is clear. Related party transactions are to be reported for company specific details. So the answer is option D. Then moving on to next, SRN number. Now related to this also there is a confusion because the solution, the answer which is given is wrong. SRN number of Form CRA2 is to be reported in. What is SRN number? I'll give you the clarification regarding that. See, in Form CRA4, this SRN number will be given. I have given you the explanation when I was discussing Form CRA4 as well. What is this SRN number? SRN is Serviced Request Number, which means in Form CRA2, you would have given about the intimation of appointment of cost auditors, central government. Now, whoever you have appointed as cost auditor is giving the cost audit report. So, what is Form CRA2 which you have filed with the central government? What is the number of that particular form? Give it here. Specify it here. So, see here. Or CRA2 filed for the appointment of cost auditor. That is called a service request number. Now, this will be given under general information of the company. And after that only we'll go for general details of the cost auditor. Okay. First, it will be there related to the company. Then it will be there related to the auditor. After that, there will be attachments. Okay, this is about Form CRA4. Now, if you see the MCQs which is given here, see, in Form CRA2, SRN number, will it be given under general information? Will it be given under general details of a cost auditor or cost accounting policy or reconciliation of indirect taxes? It will be given under general information. I hope it is clear. Now moving on to next 38. Transfer price and normal price are reported in. Transfer price, normal price, we usually talk this in related party transactions. Simple. So these are the terms which we use for related party transactions. So the answer is option D. Next, profit reconciliation is to be reported for. We will not do the profit reconciliation for one single department, right? Either we'll do it for entire financial records and entire cost records, or we'll do it for entire cash account and bank account. So for entire company it will be done, not for single departments or plant or product or cost center. So it should be done for the entire company. These are logical questions. Don't blame this is not there in the syllabus. Logical based. Then question number 40. Corporate identity number of a company is reported in. CIN, corporate identity number of a company. It will not be given under the details of cost auditor because it is related to company. It will not be given under profit reconciliation because it is related to company. It will not be given under product or service details because it is related to company. So, corporate identity number will be given under general information of a company. General information. I hope it is clear. Then, 41. Difference in valuation of stock between financial accounts and cost accounts are to be reported in. Financial accounts, cost accounts, difference. We'll do it in where? Product and service profitability statement, value addition and distribution of earnings, financial position and ratio analysis, profit reconciliation. Difference we show it in profit reconciliation. This is what we do. So the answer is profit reconciliation. Next, 42. PAN of cost auditor or cost auditor's firm is to be reported in general information, general details of a cost auditor, cost accounting policy, product or service details. Simple general knowledge. PAN details of a cost auditor will be given under details of a cost auditor. So general details of a cost auditor. Next. As per company's cost records and audit rules 2014, cost records are required to be maintained by who has to maintain cost records? Only companies listed on stock exchange? All manufacturing companies irrespective of their turnover? No. Companies cost records and audit rules, we have rule 3 and rule 4 which specifies about the turnover limit. So irrespective of turnover, eliminate it. Then companies engaged in regulated sectors meeting specified threshold limit, the answer is yes. Only foreign company having Indian subsidiaries, the answer is no. So among the given options, what is the best option which is there? Companies which are engaged in regulated sectors meeting specified threshold turnover limits. Now, why only regulated sectors? Non-regulated sectors also there? No. Yes, it is there, but it is it given in the options? The answer is no. Among the given options, what is the best? The best is companies engaged in regulated sectors meeting specified threshold turnover limit. So the answer is option C. I hope it is clear. Then question number 44. A company is required to maintain cost records if overall turnover from all of its products and services. They are asking about cost records maintenance, which means they are asking about rule 3. Rule 3 becomes applicable when there is overall turnover from all of its products and services in the immediate preceding financial is more than or equal to 35 crores. So the answer is option D. I hope it is clear. Then, which of the following is a regulated sector under the rules? Cement, power generation, automobile, textile. So, if you see here, cement, is it there in the regulated sector? The answer is no. Automobile, textile, it is not there. So, if you see telecommunication, electricity, petroleum, drugs, fertilizers, sugar and industrial alcohol. So, here they have given power generation. So, we can consider it to be the electricity. So, we can take that. I hope it is clear. Then, question number 46. As per rules, cost auditor appointed has to render the cost audit report to the board of directors as per specified time in which form? Form CRA 1. Maintenance of cost records. Form CRA 2. Intimation of appointment of cost auditor by company to central government. Form CRA 3. Cost audit report being filed by the cost auditor to the company. So, cost auditor has to give it to the board of directors in which form? Form CRA 3. I hope it is clear. Then, 47. The due date for filing the cost audit report in CRA 4 is within, which means CRA 4 has to be filed to the central government within how many days? Within 30 days from the receiving of cost audit report from the cost auditor. 120 days of the end of financial year? No. 180 days from the start of next financial year? No. 60 days from the date of cost audit report? No. 30 days from the date of submission of report to the board. Within 30 days from submission of it to the board, the company has to file it to the central government. I hope it is clear. In MCA portal, in form CRA 4, in XBRL format, in electronic mode along with fees. Option D. Next, 48. Which of the following types of companies are exempt from the cost audit requirement? Audit requirement they have asked. Companies exporting 10% or more of total turnover? No. Companies operating from special economic zone? SEZ? Yes. Companies classified as MSME? This is not related to cost audit, that is related to cost records. Dormant companies only. Now, the answer is companies operating from special economic zone because they have specifically asked about exemptions to cost audit requirement. I hope it is clear. Then, 49. Who is responsible for maintaining cost records as per rules? Cost auditor, chief financial officer, board of directors or company secretary. Now, when we talk, actually the cost records have to be maintained by the management of the company. Now, who will come under the management? Cost auditors? No. Chief financial officer? No. Board of directors? Yes. Company secretary? No. Among the given options, who will be considered to be the management? So, the cost records have to be maintained by the board of directors. Option C is the best option. If management is given, you have to underline management. I hope it is clear. Then 50. What is the penalty for default in compliance with maintenance of cost records? So if cost records are not maintained, then what will be the penalty? So 25,000 to 5 lakhs for the company, and officer in default 25 lakhs to 1 lakh or imprisonment. So this is the penalty which is there if they are not maintaining cost records. So remember, this penalty may be tested. So the answer will be option A. I hope it is clear. Then Form CRA2 should be signed on behalf of the company by. Form CRA2 should be signed by whom? I'll give you clear-cut clarity. Now, to be digitally signed by, this is Form CRA2. Okay? Either by a director, or by a manager, or by a CEO, or by a CFO, or by authorized representative, or membership number of a company secretary. So, who can actually sign Form CRA2? Either a director, either a manager, CEO, CFO, company secretary, or any other person authorized by board. Any of those people can sign Form CRA2. Here, directors of the company, yes. Secretary of the company, yes. Secretary and one of the director of the company, not two, but any one can sign. Persons authorized by board. Among the given solutions, what is best? Person authorized by the board has to sign Form CRA2. I hope it is clear. So the answer for this would be option D. I hope it is clear. So these are the options which we have seen for Companies Cost Records and Audit Rules 2014, along with the justifications of why that option has been chosen, and along with few concepts revision as well of what all MCQs are there. I hope I have given the justification for that. Next, we'll move on to Unit 3 Cost Auditor. Yes, now let us start with the MCQs of Unit 3 Cost Auditor. So let us start with first MCQ. Which one of the following is not a professional misconduct in relation to cost accountant in practice as per second schedule of Cost and Work Accountants Act 1959. So this was given according to the professional misconduct which we have, and we have two schedules for it. First schedule and second schedule. So what are the points which are given? We'll see. He or she fails to invite attention to any material departure. So where is this material departure given? It is given under second schedule. So if you see, failure to report misstatements, failure to disclose material facts or material departure. So it is given under second schedule. The first point is given under second schedule. He or she fails to report a material misstatement. As I've told you, material misstatement. If they have reported, if they have failure to report any misstatement, then it is also given under second schedule. He or she does not exercise due diligence or is grossly negligent. This is also given under second schedule. Lack of due diligence or grossly negligent. All the points are given from part 1 of second schedule. If you clearly get through it. Okay. Next, what is given? In the opinion of a counsel, he or she brings disrepute to the profession or the institute as a result of his or her actions. This is given where? Bringing disrepute to the profession is given under part 4 of first schedule. So in first schedule we have how many parts? We have 4 parts, right? In first schedule we have 4 parts, and in part 4 other misconduct in relation to members of institute generally, there are 2 points which is given. One is conviction by a court and the other is bringing disrepute to the profession. So bringing disrepute to the profession is not from the second schedule, it is from the first schedule. I hope it is clear. So here in the question they have asked about second schedule, and the answer is option D. It is not from second schedule. Moving on to the next. Which of the following is not a professional misconduct as per the first schedule? Which means they are asking something from the second schedule. We'll see that. Pays or allows or agrees to pay or allow directly or indirectly any share, commission or brokerage in the fees or profits of his or her professional body to any other person other than the member of institute. This we can clearly say that this is from first schedule. Sharing fees or profits. You can't pay, agree to pay any commission, brokerage to any other member other than the member of institute. So this is from part 1 of first schedule. Enters into partnership, that is also part 1 first schedule. entering into partnership. Then advertises his or her professional attainments. Yes, securing business. You can't advertise about your solicitation. So this is also given under advertising professional attainments. All these points are given under first schedule. I hope it is clear. Expresses his or her opinion on cost or pricing statements of any business or enterprise in which he or she or his or her firm or partner has substantial interest in it. Now, where is this given? This is given under second schedule. Conflict of interest in expressing opinion, which means if they have interest, if they are if they have failed to express their interest on any of the projects which are happening inside the company, then it is given under second schedule misconduct. It is not the first schedule. I hope it is clear. So if they have substantial interest in it and if they have not disclosed, it is professional misconduct according to second schedule. I hope I have given you the clarity about it. So because of which at least once you have to go through with the professional misconducts. Now, if you ask me, these MCQs haven't been tested so far. This was the MCQs in 2016 syllabus and related to professional misconduct also. There wasn't any question so far. It may be tested, may not be tested. Don't worry. Moving on to next question number 3. A member of ICAI shall be deemed to be guilty of other misconduct. Other misconduct is given under part 4 first schedule and part 3 second schedule. If he or she is held guilty of any civil or criminal court of an offence which is punishable with the imprisonment, which means in the first schedule, part 4, it is given that if they are convicted by a court either through a civil offence or a criminal offence, and if the term is not exceeding 6 months, then it is other misconduct according to part 4, first schedule. If it is exceeding 6 months, they shall be deemed to be guilty of other misconduct either of a civil or criminal court when the punishable with imprisonment for term exceeding 6 months. If it is more than 6 months, then it is other misconduct according to part 3 second schedule. Less than 6 months, part 4 first schedule, other misconduct. I hope it is clear. So here we can write it about 6 months duration. For the term exceeding 6 months or the further term less than 6 months. So here it is given as exceeding 6 months. So we'll write exceeding 6 months. I hope it is clear. Then BORS and Co., a firm of cost accountants, was appointed as a cost auditor of Pantex Limited for auditing the cost records for the financial year 2018 and 19. Okay. The auditor appointed as such shall continue in such capacity. Till when they have to continue in such capacity? For this, I am taking my capsule notes. Till when they will be holding their office. For this, I will take you to the rule 6, which we have seen. Till when a cost auditor continues in his or her office. Till the expiry of 180 days from the closure of financial year or till he or she submits the cost audit report. If you take till 180 days, expiry of 180 days from the closure of financial year or till he or she submits the cost audit report, whichever is earlier, then that will be the term of office of a cost auditor. So here along with dates they have given to us, either it should be 180 days from the expiry of financial period or it should be till he or she submits a cost audit report. So here we'll see what are the dates which are given. They have appointed on 30th of July 2018. Okay. Now 30th of July 2019 on the expiry of 1 year of an appointment, 1 year provision is not there to us. 30th 9/2019 on expiry of 6 months from the closure of accounts. So here we have 180 days. We don't have 6 months duration. So if you take 6 months duration, which means what? For each month, if you're calculating 30 days, then it will be coming to 180 days. But it's not like all the months we have 30 days, we have 31 days as well. So after expiry of 6 months from the closure of accounts, that is also not valid. After the expiry of 180 days from the closure of financial accounts. Then 38/2019, date of submission of cost audit report. Till when they submit their cost audit report or till the expiry of 180 days from the closure of financial year, whichever is earlier will be taken. Here they have given earlier date, which is 30th of 8 2019. They have submitted their cost audit report. So till then they have their term of office. I hope it is clear. So the answer is option C. Then regarding annual general meeting also, the provision is not there. I hope the provision is clear. Now moving on to next. The authority for fixing remuneration of cost auditors as per section 148. This is very important regarding the remuneration and appointment of a cost auditor. I'll give you a clear-cut idea about it. Who will appoint a cost auditor? Board of directors will appoint a cost auditor. Who will fix the remuneration of a cost auditor? Board of directors will fix a remuneration for a cost auditor. But if there is an audit committee, then audit committee recommendations will be taken. Audit committee will recommend, board of directors will decide about the appointment and remuneration. After deciding regarding the remuneration, it should be ratified by shareholders, which means shareholders have to approve that giving this much of salary to the cost auditor is approved. For that, the sanction has to be given by the shareholders. If audit committee is not there, directly board of directors will appoint and directly board of directors will decide about the remuneration. So who has the final decision authority? Board of directors. But audit committee can give recommendations to them. I hope it is clear. So who will fix the remuneration? The answer is board of directors, not the audit committee. Audit committee cannot fix. Audit committee can only give the recommendations to them. Okay, and shareholders also will not decide. Shareholders only can give the approval for it. Who will decide? Board of directors. I hope it is clear. So the answer is option D. Then a cost accountant in practice, if solicits clients or professional work by circular, advertisement or professional communications, is deemed to be guilty of misconduct under which schedule, which part? I'll take you directly to here. If they are soliciting clients. See, soliciting clients is given under part 1 of first schedule. This is why I'll tell you points are important to remember. If you doesn't remember it, it's okay, not a problem. Don't get tensed right now. I hope it is clear. Okay. So if they are soliciting clients, it is given under part 1 first schedule. So the answer is part 1 of first schedule. Then 7th, cost auditor to report fraud. Reporting of fraud under cost auditor. This is also important. I usually tell to the students that section numbers are very, very important. See here, reporting of fraud is given under section 143 subsection 12. This is very important section in terms of theory as well as in terms of MCQs as well. Reporting of fraud is a right as well as a duty to the cost auditor in the section 143 subsection 12. I hope it is clear. 143 subsection 12. Then, when the cost auditor has to be appointed for the financial year 2024 and 2025 regarding the appointment. Within 180 days from the start of financial year, a cost auditor has to be appointed for the organization. Before 31st of March, within 60 days, within 180 days from the commencement of financial year. The answer is option C. Cost auditor has to be appointed within 180 days from the commencement of financial year. Then, the appointment of cost auditor is defined under which section of Companies Act 2013? This we have also seen in Unit 1 as well. Section 148 subsection 3 talks about the appointment of a cost auditor. Section 148 subsection 3. Then, if there is any kind of a casual vacancy, this we have already done in Unit 2. If there is any kind of a casual vacancy, either through removal, resignation, death, insolvency, whatever it can be, or through disqualifications also, the casual vacancy has to be filled by the board of directors within 30 days from that vacancy. So the answer is option A, 30 days. Then, question number 11. As per section 141 subsection 3, read with rule 10 of Companies Audit and Auditors Rules 2014, a person who has been convicted by a court of an offence involving fraud and a period of dash years has not elapsed from the date of such conviction is disqualified and not eligible for the appointment as a cost auditor, which means it is given from disqualifications. Remember the section numbers, which will help you to gain more marks in the examination. Okay, qualifications have been given under section 141, read with section 148, along with companies cost records and audit rules 2014. Whereas disqualifications are given under section 141 of Companies Act, read with rule 10 of audit and auditors rules 2014 and section 148 of Companies Act 2013. In this disqualifications, we have one disqualification, that if a person has been convicted for a fraud and after the release of conviction the 10 years period has not elapsed, then they will be disqualified to be appointed as a cost auditor for that period of 10 years, whatever it is there. It is after the expiry of that conviction, which means after the release date, 10 years period is the period in which they will not be appointed as a cost auditor. It is a disqualification. So the answer for this is 10 years. I hope it is clear. Then 12 point. A cost accountant who fails to comply with the provisions of subsection 12 of section 143. What is 143 subsection 12? Talks about the reporting of fraudulent cases. Okay. 143 subsection 12 talks about reporting of fraud. See, 143 subsection 12. What does 143 subsection 12 tells? If a cost auditor has come across any of the reason to believe that fraud has been committed by any officer or any person in the company, then they can report about that fraud. If the amount is less than 1 crores, if the fraudulent amount is less than 1 crores, they need not report it to the central government. What they have to do? They have to report the matter either to the audit committee or the board of directors. After reporting, their work is done. Cost auditor work is done. Board of directors have to take the necessary action regarding that, and regarding that necessary action they have to give it in their board's report. In this case, reporting to central government is not required. When it is required, if the fraudulent amount is more than 1 crore rupees, then what is the procedure? Then follow the prescribed procedure. Report to the board or audit committee immediately, but within 2 days of knowledge. They have got to know about that fraudulent activity. Within 2 days, they have to report it to the board or audit committee, and they have to wait for their observations for 45 days. The board or audit committee shall reply with their observations within 45 days. Cost auditor has to wait for the reply for 45 days after reporting. Okay, then the auditor shall forward his report to the central government in form ADT4 within 15 days from receiving such reply. Which means if before 45 days, if the cost auditor has received reply from that date, in 15 days they have to report it to the central government. What if the board of directors or audit committee hasn't gave any reply after 45 days? Within 15 days, cost auditor has to give a report to the central government stating that this is the fraud which was happened. I have intimated it to the board of directors, and board of directors hasn't gave any reply to me. Regarding that, central government in form ADT3, cost auditor has to report it to the central government. I hope it is clear. So any of these limits can be tested as MCQ. I hope it is clear. And if cost auditor is not complying with any of the provisions of section 143 subsection 12, then there is a punishment under 143 subsection 15. What is the punishment? In case of a listed company, the liability will be up to penalty 5 lakh rupees. If it is an other company, then the liability of minimum 1 lakh rupees and the maximum penalty will be 25 lakh rupees. I hope it is clear. Now, what is the MCQ is given? Maximum penalty. Maximum penalty is 25 lakhs. Listed company 5 lakhs, other company 1 lakh. That is minimum. Maximum 25 lakhs. I hope the concept is also clear. Now, moving on to next. Cost audit report is to be filed on MCA portal within dash days from the end of financial year. Within 180 days from the end of financial year, cost audit report has to be filed in MCA portal. I hope it is clear. Next. Section dash provides that the officer or employee of a company shall not be eligible for appointment as a cost auditor of a company. I have told you about the disqualifications of a cost auditor. What is the section which talks about disqualifications? Section 141, read with rule 10. of Audit and Auditors Rules 2014 and Section 148 of Companies Act 2013. So here exclusive section which talks about qualifications, disqualifications, rights, duties and obligations is Section 141 of Companies Act 2013. So the answer is option D, Section 141. Then question number 15. Section dash of Companies Act 2013 states the cost auditor shall have the same powers as the auditor of company under Section 143 of the Companies Act 2013. Now, which section talks that both the other auditors and the cost auditor has the same responsibilities or same powers which are there? It tells in Section 148. So, in the introduction of this entire unit, now, see in the introduction, the entire unit, I have given section 148 subsection 5. Section 148 subsection 5 provides that qualifications, disqualifications, rights, duties, obligations as applicable to financial auditor will equally be applicable to a cost auditor. Now, this has been given that the powers which are there to the financial auditor are equally applicable to the cost auditor has been given by which section? Section 148 subsection 5. I hope it is clear. Here subsection 5 is not given. So we'll take section 148. But the actual answer is section 148 subsection 5. I hope it is clear. Next, which audit covers efficiency, performance and proprietary? Which means which audit gives us both about the records about the efficiency, performance and proprietary. Proprietary here means that whatever the money which is being put, whether the money is worthful or not, nothing but efficiency of cost, performance, whether the cost operations are being performed correctly or not, proprietary, whether each and every money is a worthful or is there a wasteful expenditure, can there is any place where the cost can be reduced. Now all these three can be done through cost audit. So the answer is option D. I hope it is clear. Moving on to next question number 17. Notification of companies cost records and audit rules 2014 has resulted in superseding of. This kind of question we have also seen in unit 2 where it was about the other laws as well. But here we have companies cost accounting records rules 2011. I hope it is clear. So the answer is option C. The same question we have seen there as well. There the answer was all of the above. Next, question number 18. Section 148 of Companies Act 2013 deals with the provisions relating to what? Relating to financial audit, internal audit, secretarial audit, cost audit. Cost audit. I hope it is clear. Next, question number 19. Dash is absolutely necessary for efficient resource utilization. Optimum utilization of resources. We have seen that in the scope of cost audit. We have seen in the advantages of cost audit as well. Optimum utilization of resources is taken care in cost audit. I hope it is clear. So the answer will be cost audit. Then question number 20. A person shall not be eligible to be appointed as a cost auditor of the company if he has been convicted of an offence involving fraud and a period of dash years has not been elapsed. It is a repeated question. The answer is option D. 10 years has not been elapsed. Next, question number 21. Cost auditor is to be appointed within how many days from the start of financial year? Within 180 days from the start of financial year. Then, moving on to 22. This is about the disqualification. Relatives of any partner of the firm holding any security or interest of the company of a face value exceeding dash lakhs cannot be appointed as a cost auditor of a company. So this is given from the disqualifications and they are asking about what? Relative of a partner. See the question clearly. Relative of any partner, which means if a person, relative or a partner is holding any securities, then even of a rupee 1 face value, they are disqualified. But relative of a partner can hold the securities up to more than 1 lakh rupees. I hope it is clear. So here they have asked about the relative of a partner and they can hold up to rupees 1 lakh. More than 1 lakh, they are disqualified. 23. Cost audit is to be conducted by the cost auditor who is a or an Indian resident, qualified chartered accountant, qualified company secretary, qualified cost and management accountant. There should be qualified cost and management accountant appointed by the board of directors. They can only become a cost auditor. That is given under which section? Section 148, subsection 3. Qualified cost and management accountant. I hope it is clear. Next, 24. The cost auditor is dash for forming and expressing an opinion of the cost statements. Cost auditor is responsible for forming and expressing an opinion of cost statement. Irresponsible, reasonable, assessing. It's not a proper sentence formation. So based on sentence formation, you can write few MCQs which is responsible. I hope it is clear. Then question number 25. Which of the following persons shall not be appointed as a cost auditor of a company? This can also be called as a disqualification. A person who has been appointed as an auditor of a company for a respective period. No other auditor can be appointed as a cost auditor of a company. This is given under section 148 subsection 3. Sorry. So see here clearly section 148 subsection 3. Any other auditor of a company cannot be appointed as a cost auditor of a company. If they have already appointed as an auditor of a company, then they cannot be appointed as a cost auditor of a company for the respective period. Yes, a person who is or at any time during the preceding 3 years was a director, officer or in the employment of a director. This is given as a disqualification. So in disqualifications, what is given? A person, if they are acting as a KMP or director of a company, they cannot be appointed as a cost auditor of that particular company. I hope it is clear. I'll show that as well. Now, see the disqualifications. If the relative as a director or a KMP, if they are a company's officer or employee, then they are disqualified to be appointed as a cost auditor. If the person has been appointed as a director or officer or employee of a company, then they are disqualified. So the answer will be both A and B. I hope it is clear. Then 26. Which of the following persons shall not be appointed as the auditor of a company? This is also a disqualification. A person who has been appointed as an auditor of a company, no other auditor can be appointed as a cost auditor. A spouse of the director of a company, yes. Person associated with officer or employee, disqualified. A body corporate, yes, the first thing is body corporate. Body corporate cannot be appointed as a cost auditor. So all the three provisions are right. The answer will be all of the above. So what are the disqualifications? Body corporate, a person who is a company's officer or employee, person associated with officer or employee, person, relative or partner holding securities. Relative of a partner can hold securities up to 1 lakh rupees. If it is more than 1 lakh rupees, disqualified. If a person, relative or partner having a debt in the company, associate company, subsidiary company, holding company for an amount of more than 5 lakh rupees, up to 5 lakh rupees, debt can be there. More than 5 lakh rupees, no debt should be there by person, relative, partner. If they are giving guarantee can be given only up to 1 lakh rupees. If it is more than 1 lakh rupees, disqualified. They should not have any kind of a business relationship, except two exceptions are there. The transaction which are in the nature of permitted services, which means according to section 144, we have specialized services. Auditors should not provide these kind of specialized services at any point of time, unless otherwise specialized services. If they are providing any other services, then it is okay. And if they are entering into a transaction and the transaction is an arm's length relationship, then also it's fine. Other than this, through any kind of business relationship, disqualified. Then relative as director or KMP, full-time employment elsewhere, exceeded the auditor limit, convicted for a fraud and 10 years period has not elapsed, engaged in any kind of specialized services given under section 144. All these are the disqualifications. A cost auditor is not permitted to express opinion on adequacy of cost records. No. The main reason for appointing a cost auditor is to express an opinion thereon on the cost records. So the first option is not. Provide internal audit services to the company. Absolutely, yes. What are the specialized services? Prohibited services to be provided by the cost auditor. accounting and bookkeeping services, internal audit services, outsourced financial services, design and implementation of financial information system, actuarial services, investment advisory or banking services, management services. These are prohibited services to be provided by the cost auditor. So which is not permitted here, providing internal audit services to the company is not permitted. Next, 28. Can a statutory auditor of a company also be appointed as a cost auditor? The answer is no. No other auditor can be appointed as a cost auditor. Only a cost and management accountant who is appointed by the board of directors can become a cost auditor. No, this is specifically prohibited. No other auditor can become a cost auditor. I hope it is clear. Then 29. Which professional body regulates the conduct of ethics of cost auditors in the India? Now, who will actually conduct or go for the ethics about the cost auditors in India? This we have about the objectives of profession and related to professional misconduct, right? Now, professional misconduct, whatever we have related to professional misconduct and objectives of profession, and what is that? Just a moment. Professional ethics, fundamental principles, objectives of a profession, and professional misconduct. All these are given by whom? By ICMAI. So who is regulating? Cost and Work Accountants Act. ICMAI is regulating. I hope it is clear. Next. A cost auditor finds that the company is not following a particular cost accounting standard which materially affects cost disclosures. His reporting responsibility is to ignore it as cost audit is voluntary. No, cost audit is not voluntary for everyone. Qualify the cost audit report mentioning non-compliance. Withdraw from the assignment without reporting. Adjust the cost figures himself to comply. The 3 A, C and D are like violations which they are being done. They can't ignore it, they can't adjust the figures, or they can't withdraw from the cost assignment. They can qualify the cost audit report. Now, related to this also, many students have a doubt when a qualified report will be issued by a cost auditor, which means if there are any kind of a material effects in the cost audit report or in the cost records, then they will give a qualified report. I hope it is clear. When nothing is there, everything is true and fair, unqualified report will be given. I hope it is clear. Qualified report doesn't mean that everything is correct. No. There is some kind of an effect, then qualified report will be given. Now, question number 31. Which of the following is not a disqualification for appointment as a cost auditor? A person indebted to the company. A person, a relative or a partner can have indebted debt in a company, associate company, subsidiary company, holding company for an amount of 5 lakh rupees. I hope it is clear. This we have seen clearly. Up to 5 lakh rupees, then again have debt in company, subsidiary company, associate company and a holding company. See, they can have indebtedness up to 5 lakh rupees. If it is more than 5 lakh rupees, then it is a disqualification, which is not a disqualification. A is not a disqualification. A body corporate is disqualified to be appointed. A relative holding securities worth 1,20,000. Relative can hold securities up to 1 lakh rupees. If it is more than 1 lakh rupees, disqualified. So it is disqualified. A firm where partner holds securities in the company, disqualified. So which is not a disqualification? This, because the limit is 5 lakh rupees. 32. A cost auditor found guilty of deliberately proving false reports and certificate will be liable for punishment under section 447 of the Companies Act 2013, where it is given under liabilities of a cost auditor. See, liabilities of a cost auditor. Fraud or false statements. If they are willfully giving any false statements, then they are punishable under section 447. Deliberate false reports, section 447. These are given under liabilities of a cost auditor. Then question number 33. Dash provides as the central government shall maintain a panel for the experts to be called as mediation and conciliation panel, consisting of such number of experts having such qualifications as may be prescribed for the mediation between the parties during the pendency of any proceedings during the central government or tribunal or appellate tribunal. So here the question is about mediation and conciliation panel, and that is given under strategic positions. Strategic positions of a cost auditor. Mediation and conciliation panel is under section 442. I hope it is clear. So the answer is section 442, mediation and conciliation panel. Liabilities of a cost auditor are not so important. Strategic positions of a cost auditor is not so important. I have told that yes, but rarely MCQs are being tested. I hope it is clear. So this is our unit 3 cost auditor. I hope I have given you the enough clarity along with concepts revision. So let us start with the MCQs of Unit 4, which is overview of cost accounting standards and generally accepted cost accounting principles. Now, the first MCQ, CAS 17 stands for, as I have already told you, the names of cost accounting standards are very important for examination point of view. So CAS 17 deals with interest and financing charges. So the option royalty and technical know-how. Royalty and technical know-how is CAS 20. Material cost is CAS 6, and research and development will be CAS 18, whereas CAS 20 is interest and CAS 17 is interest and financing charges. I hope it is clear. So CAS 17 is interesting and financing charges. Next, moving on to next, CAS 21. Cost accounting standard 21 deals with what? CAS 21 deals with quality control cost. CAS 21 quality control cost. For making it easy, I'll be writing here so that you'll not get confused. So royalty and technical know-how is 20. Material cost is 6. Research and development cost is 18. And cost of service cost center is CAS 13. Quality control cost is 21. Capacity determination is 2. And cost classification. Cost classification is CAS 1. Classification of cost. Right. So here they have asked CAS 21. CAS 21 is quality control. So remembering all the names of cost accounting standards is important. Option B. Now moving on to the third. The foreign exchange component of imported materials is converted at the rate of. So this is according to the CAS 6 material cost. So according to CAS 6 material cost, just a moment. So here it is. In CAS 6 material cost, it is clearly given how to calculate the value of materials if there is a foreign exchange component of imported components, which means if there is a foreign exchange component included in the material cost purchase, then the value at the rate on the date of transaction should be taken into consideration for calculating the amount of value of materials. If after the date of transaction, if there is any effect in the foreign exchange rate, that will not be considered for material cost. So here on the date of transaction, whatever the rate is there, that will be taken for the conversion of this foreign exchange component. I hope it is clear. Related to this, we have practical questions as well. So here the foreign exchange component of imported material is converted using the rate on date of transaction. The answer is option C. Then moving on to next. Question number 4. Which of the following is not forming part of cost of transportation? Cost of transportation is given under cost accounting standard 5. CAS 5 talks about the transportation cost. What is not forming part of transportation cost? Cost of transportation? Obviously yes. And when you see what all are included in the transportation, we can come across the insurance cost, the transit insurance, freight charges, and the local octroi charges. Everything will be inclusive, whereas only two things will be excluded from the transportation cost, which is demurrage charges and detention charges. Why these are excluded? Because in the all cost accounting standards, you can clearly remember that if there are any penalties or fees which have been given to any of the authorities or paid to the government, penalties or any fees have been paid, then that will be excluded from all the cost accounting standards. So here also they have asked about what is not forming part of the cost. Demerit charges and detention charges are also one kind of penalty charges which are being paid to the port authorities. So this will not be forming part of the cost of transportation. So the answer is option C, demerit charges. Then moving on to next, ideal capacity is the difference between. What does it mean by ideal capacity? This has been tested from cost accounting standard 2, capacity determination. So before understanding about the ideal capacity, we have to understand about two. One is installed capacity. What does it mean by installed capacity? Installed capacity means the 100% maximum utilization what can be achieved. And what is actual capacity utilization? Whatever the capacity which have actually utilized. So installed is without considering any of the interruptions, what will be the 100% maximum efficiency of capacity which we can utilize, that is installed capacity. So from installed capacity, if we try to eliminate the actual capacity utilization, whatever the difference is there, that will be our ideal capacity. So ideal capacity will be the difference between installed capacity and actual capacity utilization. I hope it is clear. Installed capacity and normal, abnormal, ideal and normal, installed and normal. The answer is installed capacity and actual capacity. I hope it is clear. Then question number 6. Remuneration of a non-executive director is treated as. Now, this is given under the employee cost calculation. In employee cost calculation, what all will be included? Employee cost, executive director charges will be included in the employee cost. Whereas the any other remuneration which has been paid to non-executive directors, this will not form part of employee cost. This will be part of administrative overheads, which means it is one of the indirect costs which is incurred by the organization. So any remuneration which is paid to non-executive directors will be administrative overheads. It will not be forming part of employee cost directly. I hope it is clear. So the answer is option B. Now moving on to next. Which of the following is not part of employee cost as per CA7? CA7 employee cost. Which of the following is not a part of? Leave with pay. Leave with pay. Now, if a organization, if an employee is leaving, then we have to pay compensation for them. Sorry, if the employee of an organization is taking a leave, then we have to make the payment in that during the tenure, right? So that is called as leave with pay. Whether leave with pay, gratuity, bonus, encashments, whatever it is, PF, like health insurances, medical expenses, all are forming part of employee cost only. So leave with pay, the answer is yes, it is a part of employee cost. Medical benefits to the employees and its dependents, yes, insurance is being provided by most of the companies. So it is also forming part of employee cost. Cost of employee stock option, yes, EPS or any kind of voluntary retirement scheme payments, everything is forming part of employee cost. But whereas if they have laid off from the office, which means the employee has been removed from the office, then the compensation which is paid is not part of employee cost. I hope it is clear. So compensation which is paid for the layoff period will not be forming part of employee cost. I hope it is clear. So only for employees who are currently working for the organization, and for them if we have incurred any kind of a cost, then that is employee cost. Either for current or for the future, if we are incurring any cost, then that will be part of employee cost. But if they are leaving the organization, if we are paying anything, then that will not be forming part of employee cost. Regarding this, we also have the other point, VRS payment which has been made for the closure of a section. Now, whatever the payment which is made for a discontinued operations of a business, that will also not form part of employee cost. So you can connect this both. I hope it is clear. Then question number 8. Total cost accounting standards issued by the Cost Accounting Standard Board of CMA Institute as on today are. Now, with this question, you can understand two things. which has been issued cost accounting standards. Cost accounting standards are not issued by the ICMAI, but cost accounting standards has been issued by Cost Accounting Standard Board. This can also be tested as MCQ. So see, cost accounting standards are issued by Cost Accounting Standard Board. And how many cost accounting standards has been issued so far? Actually, for now 24 cost accounting standards are only there. Don't take it as an amendment. Even though 25th has been amended and bought in the ICMA website, that amendment is not applicable for you. So only 24 cost accounting standards. I hope it is clear. Then total guidance notes for by Cost Accounting Standard Board of CMA Institute as on today are. So how many total guidance notes has been issued so far? There are 13 guidance notes which has been issued so far by the Cost Accounting Standard Board, and I'll tell you what those are. So what are those are? CAS2, CAS4, CAS6, CAS7, CAS8, CAS9, CAS10, CAS11, CAS12, 13 and other guidance notes related to CSR activities and related to maintenance of cost accounting records and related to compilation engagement by cost accountants. This is not required, but yes, you have to remember that guidance notes have been issued by Cost Accounting Standard Board for 13 guidance notes. So 13 guidance notes has been issued by our Cost Accounting Standard Board. I hope it is clear. Then moving on to next MCQ, which accounting standard deals with material cost? So as I have told you, Cost Accounting Standard 6 material cost. CA6 deals with material cost, option C. Then moving on to next, till today guidance notes for Cost Accounting Standard Dash is not issued by the Cost Accounting Standard Board of CMA Institute. As I have told you, for what guidance notes has been issued? For 2, 4, 6, 7, 8, 9, 10, 11, 12, 13. For this guidance notes have been issued. So if you see here, for 2 did guidance note issued? The answer is yes. For 7 did it issued? The answer is yes. For 12 does that issued? Yes. For CAS 17 it has not been issued. So for CAS 17 guidance note has not been issued. So the answer would be option D from the given options. I hope it is clear. Then moving on to next 12, details of raw material procurement cost. Purchase price has been given to 100, transportation 10, demurrage 10. As per CA6, raw material cost to be considered shall be. So how much should be the raw material cost? Now we have to analyze what should be included and what should not be included. For raw material procurement cost, do we include purchase price? The answer is yes. Do we include transportation cost? The answer is yes. Do we include demurrage charges? No, demurrage charges and detention charges will not be considered. So 100 plus 10 will be 110 rupees. I hope it is clear. So 100 plus 10. So our answer will be 110, option B. I hope it is clear. Then question number 13. Details of employee cost for cost records. Gross employee cost is 100. TDS is 30. As per CA7, employee cost to be considered shall be. So how to calculate this? Gross pay has been given to us. So gross pay will be, so the gross pay will be 70 and for that we have to deduct TDS. Gross pay is 100 which is given. Gross pay is 100. TDS we have to deduct it to be 30. So our net pay will be 70. Net pay will be 70. So according to Cost Accounting Standard 7, employee cost, whatever the payment has been made, will be 70 and to the cost which has been incurred, if there are any refundable taxes and duties, then we must add it back to the employee cost. So is TDS refundable? The answer is yes. So if there are any refundable taxes and duties, that will be added back. So add 30 and our answer will be 100. I hope it is clear. So the answer is option A, 100. Then question number 4. Cost accounting standard dash pertains to the cost of utilities. As I've told you, the names are very, very important. CAS 8 deals with cost of utilities, option C. Then CAS 10 deals with what? CAS 10 deals with direct expenses. Direct expenses, option D. As it is direct question, no explanation is required for that. Now moving on to next. Question number 16. Find the direct expenses as per CAS 10. So how to calculate direct expenses? Finance charge on lease of design 10 lakhs is given to us. Finance charges. When it comes to finance charges is related to financial term, finance cost. Finance cost will never be considered in any of the cost accounting standards. So this finance charge will not be considered in cost accounting standard. Not only in CAS 10, it will not be considered in any of the cost accounting standards. Then special design charges are 20, software development charges are 15, and traveling abroad charges are 7. So here 35 plus 7, it will be 42 lakhs. So 20 plus 15 plus 7, finance charges will not be considered. So the answer for this question will be option D, 42 lakhs. I hope it is clear. Then moving on to next question number 17, penalty paid to PF authorities. As I have told you, if there are any penalties or fees which has been paid to any government or to any authorities, that will not be included in the cost accounting standards. So even in the employee cost, penalties which have been paid to the PF authorities will be excluded. I hope it is clear. So the answer is option B, excluded. Then question number 18. Cost accounting standard 18 stands with what? CAS 18 stands with research and development cost. R&D cost, option C. I hope it is clear. Then 19. As per CAS 23, overburden removal cost. The activity of overburden removal that benefits the identified component of the ore to be mined by the entity is called as. So here for this, if you see, if I open the concept book, overburden removal cost CAS 23. If you see here, the definitions are given to us. Stripping ratio. What does the stripping ratio means? The ratio of overburden excavation to ore mined. So if there is any excavation cost which is being overburdened and that is being done to majorly ore mines, which is mineral mining sites, then that is called as what? Stripping ratio. So if we see, the same thing is being tested in a different terminology. Overburden removal that benefits the identified components of ore to be mined by the entity is called as stripping activity. If you are calculating it as a ratio, then it is stripping ratio. So the answer for this will be option C, stripping activity. Then question number 20, CAS 9 deals with packing material cost. Yes, the options which is given in the back is wrong. CAS 9 is packing material cost. CAS 9 deals with packing material cost. I hope it is clear. Option C is the correct answer. Then CAS 20. CAS 20, I guess this is repeated again, royalty and technical know-how fee. CAS 20 deals with royalty and technical know-how fee. Now moving on to next 22. As per CAS 2, capacity determination, actual capacity utilization shall be presented as a percentage of. Now what is actual capacity? Actual capacity is the capacity which was actually utilized by the organization or by that particular unit. Now what does it mean by actual capacity utilization? Which means from 100% whatever is available, how much percentage did we utilize? From 100%, the capacity has been utilized to 60%, 70%, 80%. That is called as actual capacity. So, to calculate actual capacity utilization, what we'll do? Actual capacity divided by installed capacity. What does it mean by installed capacity? 100% maximum utilization which can be done. That is called as installed capacity. So actual capacity divided by installed capacity into 100. If we do, then we'll get actual capacity utilization. So actual capacity utilization shall be presented as a percentage of installed capacity. I hope it is clear. Then moving on to next question. Cost accounting standard 5. Cost accounting standard 5 deals with transportation, average equalized cost of transportation. I hope it is clear. Then question number 24. Under the generally accepted cost accounting principles, the cost of cane supplied from own farm to the sugar mill is treated as. So what does it mean by generally accepted cost accounting principles. Now, what all we have seen in cost accounting standards, the same principles are there in generally accepted cost accounting principles as well. It is not as there is a much difference between standards and principles. No, the both are equally same. So here what they are asking, the cost of cane supplied from own firm to the sugar mill is treated as what cost? See, for example, we have a sugar cane which is being manufactured, and from that our own firm, our own manufacturing or our own cultivation, we have sent that sugar canes to the sugar mill which we have. So nothing but what is this sugar cane? It is a raw material for our sugar mill factory. Yes or no? So what is the cost of sugar cane which was supplied to the sugar mill? Even though if we have taken it from our own production, or even if we have purchased it from the outside, it is called as direct material cost. I'll give you simple explanation for that. Here they are telling that there is a sugar cane. This is our own cultivation, which means we have our own manufacturing unit, or we have our own production center, own cultivation. And from this own cultivation itself, we are taking the raw materials to our sugar mill. Even if we are going for own manufacturing, own cultivation, or even if we are purchasing from the outside, this is a raw material. So whatever cost we are incurring for this will be our material cost. So it is direct material cost. I hope it is clear. It is a raw material, so it is direct. It is not indirect. I hope it is clear. Then moving on to next. Question number 25. Variances due to abnormal reasons. If there is any abnormal cost, that will not be forming part of the cost of cost accounting standards as well as generally accepted cost accounting principles. Similarly, if there is variances due to abnormal reasons, then that variance will be considered as an abnormal cost. So that will also not form part of cost as per standards as well as principles. I hope it is clear. So the answer will be 25, will not form part of cost. I hope it is clear. Then moving on to next question number 26. Cost accounting standards are relevant in cost audit because, why cost accounting standards are relevant? Because they are legally binding on all companies without exemption. Now, majorly do all companies have to mandatorily follow cost accounting standards? The answer is no. Only those companies which are coming under the threshold turnover limits of Rule 3 and Rule 4 of Companies Cost Records and Audit Rules 2014, which means if they have to maintain cost records, if they have to go for cost audit, then only cost accounting standards will become applicable, which means for everyone it is not applicable. Option A is wrong. Then, to provide a uniform basis for cost measurement and disclosure of comparability. The answer is yes. What is the major objective of cost accounting standards? To bring the uniformity, to have the consistency in recording, and to have a comparability between the entities or between the whatever the records which we are preparing. So majorly to have uniformity, consistency, accuracy of cost and comparability. These are the objectives of cost accounting standards. So cost accounting standards are relevant in cost audit because it provides a uniform basis for cost measurement and disclosure for comparability. Then if you want to see the other options, replace generally accepted cost accounting principles. No, it is not replacing the principles. Principles are separate, standards are separate. We have both. And these are only relevant for financial audit. No, it is not related to financial audit. It is related to costing. I hope it is clear. Then moving on to 27. A factory pay basic 8 lakhs, DA 2 lakhs, bonus 80,000, PF 96,000. What is total employee cost as per CA 7? If we have to calculate CA 7 employee cost, what will be included and what will not be included? Any direct or indirect payment which has been made to the employee who is working in the capacity as an employee of a company, all the payments, either present, future, all the payments will be included and forming part of employee cost. See here, basic, will it form part of employee cost? The answer is yes. DA, will it form part of employee cost? The answer is yes. Bonus, will it be forming part? Yes. PF, The answer is yes. So all this will be forming part of employee cost. So how much it is? The answer is 8 lakhs plus 2 lakhs plus 80,000 plus 96,000. The answer will be 11 lakh 76,000. I hope it is clear. So 8 lakhs plus 2 lakhs plus bonus 80,000 plus PF 96,000. The answer will be 11 lakh 76,000. I hope it is clear. Then moving on to next question number 28. CA's 10 deals with direct expenses. Yes, we know that. Which of the following expenses can be classified as direct expenditure? So, what is the direct expenditure which we are incurring? First, royalties on production. So, is royalties on production a direct expenditure or not? No, what does it mean by direct expenditure? Any cost which we are incurring directly for the production purposes, it is called as direct cost. If we are not incurring it for the production purposes, if it is not giving us a direct benefit from the production, then it is called as indirect expenditure. Yes or no? So here, royalties on production, they have clearly mentioned it to be of the production, which means it is a direct cost. Moving on to next, salaries of factory security staff. Now, are security working for production? The answer is no. Now, if they are not into production, is it our direct revenue generation source? The answer is no. So, this is not a direct cost. This is indirect cost. Whereas rent of office building. Now, in the building which we are doing production, for that we are doing whatever the production is there. Now, what will be the actual cost of production from the raw materials till we go for the finished goods or till we go for the selling and distribution? We can include all these things in the direct cost, whereas the other rent, stationery expenditures, everything will be indirect cost. Power used in administration, the same, it is not related to production, so it is a indirect cost. I hope it is clear. Everything is indirect cost, only royalties on production is direct cost in the given options. I hope I have given you the clarity. Then moving on to next question number 29. As per employee cost, which of the following costs shall be excluded from the employee cost? Salaries and wages will be included, bonus and incentives will be included, interest on employee loans, contribution to provident fund. Contribution to provident fund will be included. Now, interest on employee loans. Now, employee is taking a loan. For that, interest is being paid. Now, is that an employee cost? The answer is no. In the capacity of employee, if they are working, and for that working capacity, directly or indirectly, either in cash, kind, or whatever it is, if we are making any payment, then that is called as employee cost. Here, interest is being paid, and mostly the other point is that interest on loans. Interest on loans is not a cost related information, that is finance information. Any finance cost will not form part of cost accounting standards. So we can take both the justification for that. Interest on employee cost will not form part of employee cost. I hope it is clear. Then question number 30. Under cost of utilities, CAs 8, if the factory power cost is 1 lakh and 20% is consumed by non-production departments, the cost to be allocated to the production is simple. 20% is not related to production. So only 80% is related to production. 1 lakh into 80% will be 80,000 rupees. I hope it is clear. So we'll eliminate the 20% of non-production capacity, whatever is there. I hope it is clear. Then 31. Subsidized meals is 30. Charge to employee. Actual cost is 80. There are 100 employees and it is for 25 days. What is the cost to be added to the employee cost? Now, see clearly how much has been already charged to the employees. 30 rupees has been already charged to the employees. And how much is the actual cost? 80. How much hasn't been charged? 50. So either you can directly calculate the entire cost, 80 into 100 into 25. You will get 2 lakhs. I hope it is clear. So I'll write here. So what is the total cost? Total cost is equal to 80 into 100 into 25. This is around 2 lakhs. Now, how much has already been charged to the employee cost? Already charged equal to 30 into 100 into 25, and this is around 75,000. This has already been charged. Now what is the balance which has to be charged? Balance cost which has to be added is for 50 rupees. 50 into 100 into 25, this will be around 1,25,000. You can do it like this, or you can do 80 minus 30, 1,25,000 as well. So this is the explanation for here. The answer is 1,25,000. I hope it is clear. 30 rupees is already charged, but the entire cost is 80 rupees. So the balance 50 rupees has to be charged for employee cost. I hope it is clear. Then question number 32. A company imports 500 kgs at $20 per kg. Exchange rate is 75. Customs duty is 10%. Freight is 5 lakhs. What is the total landed cost? So nothing but this is a calculation of material cost. Now how much is the imported materials? 500 kgs into dollars of 20. So firstly, importation cost, we can take it like that. Importation cost equal to 500 kgs into $20 per kg. We will get it to be 7,50,000. Then for this we have to add customs duty. Add customs duty. Why we are adding customs duty? Any duty and taxes which is refundable should be added. Okay. Now 10% will add it here. How much is the 10%? 75,000. And freight. Do we include freight? The answer is yes. Any freight, transportation cost, any cost which is incurred to bring that materials into place of production will be added. So add freight cost. It will be 5,000. So what is the total amount? The total amount will come around 8,30,000. I hope the explanation is clear. Then moving on to next question. Question number 33. A product requires 10 kgs of raw material costing 50 per kg, but due to wastage, 12 kgs is used. As per CAS4, the cost of raw materials to be charged to the product is, how much should be charged to the raw material cost? Now, how much is the actual product cost which we are incurring? 10 kgs of raw material costing 50 per kg. Now, before wastage, how much has been included? It is okay. Here they haven't specified it to be a normal wastage or abnormal wastage. So we are actually considering it to be a normal wastage. Now, because of normal wastage, how many kgs has been used? 12 kgs has been used. So as per CAS4 captive consumption, how much we have to consider? We will consider 10 kgs of raw materials which has been costing of 50 per kg. So the answer will be rupees 500. I hope it is clear. This is the cost of raw materials which we will charge to the product as per CAS4. I hope it is clear. Then 34. Cost accounting standards are relevant in cost audit because they, this I guess it's a repeated, are legally binding on all companies. No, provide a uniform basis for cost measurement and disclosure for comparability. This is a repeated MCQ. 34 is option B. I hope it is clear. Then moving on to next 35. The cost accounting standard 15 is a CAS 15 talks about selling and distribution overheads. It is option D. I hope it is clear. 35 is option D. Then moving on to next 36. Royalty paid on production is 35,000. Job charges 20,000. Special design charges 20,000. Software development charges related to production 27,000. Traveling abroad for training charges 25,000. What is the direct expenditure as per CAS 10? So what all should be included? Anything or everything which is related to production will be included. So what all will be calculated? Royalty paid on production will be considered. The answer is yes, 35,000. 35,000 plus job charges will be considered it. Yes, if there is any job charges, job work charges, that also will be included. It is there in the capsule notes clearly. Then special design charges will be considered. The answer is 20,000. Software development charges. The answer is yes, 27,000. Then traveling abroad charges will be considered. That the answer is yes, it is 25,000. So whatever it is given, we are considering everything because Penalties and fees are not given here. Abnormal cost, not given. Imputed cost, not given. Or any kind of penalties, fees which are paid, not given. So, finance cost, not given. If these have been given, we would have excluded it. But anything is not given. Everything is related to production and everything is inclusive has been given. So, all these are direct expenses. So, we'll add everything. Then the answer will be 1,27,000. I hope it is clear so far. Then moving on to next. Question number 37. As per Central Excise Valuation Rules 2000, the assessable value of goods under captive consumption. Now, this has been given as per CAS 4. In CAS 4, we have rules, and Rule 30 majorly talks about the assessable value calculation when Rule 27, 28 and 29 is not applicable. How to calculate the assessable value of goods? That will be calculated at 110% of cost of production. So 110% of cost of production of such goods. Related to this, we also have practical part. I hope it is clear. At 110% of cost of production of such goods. I hope it is clear. So these are the MCQs which we have for Unit 4, overview of cost accounting standards and generally accepted cost accounting principles. I hope I have given you the justification and the correct MCQs clarification as well. So let us continue with the next unit, which is Unit 5, Cost Auditing and Assurance Standards. So majorly in Cost Auditing and Assurance Standards, what you have to understand is who has issued this cost auditing standards. Cost auditing standards has been issued by Cost Auditing and Assurance Standards Board. So here we have that. So, Cost Auditing and Assurance Standard Board has issued the cost auditing standards, and the Ministry of Corporate Affairs has granted the approval on 10th of September 2015 to the following cost auditing standards. It is coming as accounting, but it is auditing. I'm sorry for that. So, how many cost auditing standards do we have? We have 4 cost auditing standards, which is CS 101, 102, 103 and 104. 101 talks about planning and audit of cost statements. So regarding planning, it is 101. 102 is related to cost audit documentation. 103 is related to overall objectives of independent cost auditor and conduct of audit in accordance with the cost auditing standards. Whereas 104 deals about the knowledge of business, its process and about the business environment. So these are the 4 standards which we have. You just have to remember these things. It's easy to do the MCQs for that. Now, first MCQ, dash cost auditing standard deals with the planning and audit of cost statements. Right now, as I've told you, planning and audit of cost statements is CAS 101. CAS 101. Then, total dash cost auditing standards have been issued by the Cost Auditing Standard Board. 4 standards have been issued. Then, third, objective of cost auditing standard dash is to guide members in the planning for audit of cost statements. It's repeated again. Planning of cost statements is given under CAS 101. Then, fourth, which cost auditing standard requires cost auditor to prepare audit documentation on timely basis? CAS 101 talks about planning of audit. CAS 102 talks about documentation. So, the answer is 102 documentation. Then, which cost auditing standard requires cost auditor to develop an audit plan? First, CAS 1 talks about the planning on cost audit statements. So, to develop an audit plan, it is CAS 101. I hope it is clear. Just the way of questioning is getting changed, but the answer is same. Then, sixth one, which cost auditing standard requires cost auditor to evaluate and assess IT environment and control? Now, see here clearly, 1 is related to planning, 2 is related to documentation, 3 is related to about the conduct of audit, and 4 is related to business environment. So here, as we talk about IT environment and control, it is talking about the business, knowledge of business, its process and business environment. So the answer will be 104. I hope it is clear. The answer is 104. Now, who has issued the cost auditing standards? Cost auditing standards are issued by Cost Auditing and Assurance Standards Board. I hope it is clear. Cost accounting standards are issued by Cost Accounting Standards Board. Cost auditing standards are issued by Cost Auditing and Assurance Standards Board. I hope it is clear. Then, question number 8. Which section of Companies Act 2013 provides that the cost auditor should comply with the cost auditing standards? Section 148 subsection 3 tells that only a cost auditor who is a cost accountant in practice can be appointed by a board of directors as a cost auditor, and no other auditor can be appointed as a cost auditor. And the third point, whoever person who is being appointed as a cost auditor shall comply with cost auditing standards. Now these three provisions are given under section 148 subsection 3, if you guys remember correctly. So the answer will be section 148. I hope it is clear. Then question number 9. Who is approving authority of cost auditing standards? As I have told, Ministry of Corporate Affairs has granted the approval. So the answer is Ministry of Corporate Affairs. Then question number 10. Which cost auditing standard require cost auditor for forming and expressing an opinion on the cost statements? So related to forming and expressing an opinion thereon, it is given under which cost auditing standard? To conduct of an audit in accordance with the cost auditing standards, overall objectives of independent cost auditor. So related to objectives of cost auditor, what is the major objective of cost auditor? To express an opinion thereon. So it is given under which cost auditing standard? It is given under under standard 103. I hope it is clear. So related to auditor to forming and expressing an opinion thereon, it is an objective which is specified under auditing standard 103. I hope it is clear. Then 11. On which date cost auditing standard 101 to 104 are approved by the Ministry of Corporate Affairs? This is important. 10th of September 2015. 10th of September 2015. I hope it is clear. Then moving on to next question number 12. How many members are there in cost auditing standard board? This is not there in your concept book, but you have to remember the members of cost auditing standard board are 11 members. I hope it is clear. Option C. Next. Question number 13. The cost auditing standard deals with dash of the cost auditor. Cost auditing standards talk about what should be done by the cost auditor. If you see in the unit 1 itself, we have seen cost auditing standards are nothing but the guidelines for the cost auditor of how they have to go for the cost audit. This is nothing but the efficiency, effectiveness, qualification, responsibility. It talks about the responsibility of the cost auditor. So the answer is option D, responsibility. I hope it is clear. Then question number 14. Cost auditing standard preface to the standards on auditing, quality control review and related services rendered by cost accountants has been issued by. Simple question. Cost auditing standards have been issued by whom? It has been issued by Cost Auditing and Assurance Standards Board. So the answer will be CAASB, Cost Auditing and Assurance Standards Board. This can also be tested as full form. CAASB, Cost Auditing and Assurance Standard Board. I hope it is clear. Don't get confused. ICMA hasn't issued cost accounting standards. It is not issued cost auditing standards. It is issued by a board. I hope it is clear. Then moving on to next question number 15. As per cost auditing standard 101, the risk of material misstatements has two components. What are those two components? Let us see. Auditing standard 101, which talks about the planning on audit of cost statements. If you see here, audit risk. The risk of a cost auditor expressing an inappropriate opinion on materially misstated cost statements. There are three different set of risks which can be caused for materially misstated cost statements. What are those? Inherent risk, control risk, detection risk. So there are three kinds of risk. Inherent risk is the susceptibility of cost statements assertion to misstatement before considering controls. Without considering the internal controls and without understanding the internal controls, if you are expressing an opinion cost statements, then it is called as inherent risk. Control risk, not be prevented or detected by the internal controls, which means whatever the rules and policies which has been bought by the organization, those are not enough to detect about the misstatements, then it is called as control risk. Detection risk, if the auditor has failed to detect about the any misstatements happening, then it is called as detection risk. So there are three kinds of risk: inherent risk, control risk, detection risk, according to 101. So the risk of material misstatement has two components: inherent risk, control risk. Yes. Is there explicit risk? No. Financial risk? No. Material risk? No. Implicit risk? No. Detection risk? Yes. Audit risk is not there. So inherent risk, control risk, detection risk. So there are three risks. Option A is the justifiable answer. I hope it is clear. Then the objective of CAS 101. What is CAS 101? CAS 101 talks about the planning on audit of cost statements. Prepare cost records? No. Prepare cost audit documentation? No. CAS 102 talks about preparation and of audit documentation. Guide the members to make planning for audit of cost statements. Yes, CAS 101 talks about the planning of cost statements or planning of cost records. So the answer is option C. To have the knowledge of client's business, it is CAS 104. I hope it is clear. Then, moving on to next question number 17, CA, which is standards on auditing. 300 stands for what? This is also not there in the concept book, but you have to remember. SA 300 stands for audit planning. SA 230 stands for audit documentation. I hope it is clear. So remember these two. 300 stands for planning and 230 stands for audit documentation. Then question number 19. Overall objectives of independent cost auditor and conduct of audit in accordance with the cost auditing standards is dealt in which cost auditing standard? It is nothing but 103. We have already seen this 103. I hope it is clear. Then CA's dash ensures the achievement of audit objectives with available resources and securing coordination with the auditee on audit work, which talks about the achievement of audit objectives, and also the achievement should be done with available resources and securing coordination with the auditee on audit work. See clearly, this is a general basic question. Now what are we actually preparing in 101? 101 talks about planning of audit. In planning, what do we actually do? We check about the objectives of audit. Now, what has to be done? How has to be done? We'll do the verification about our resources and we'll try to optimally utilize our resources and we'll be able to determine what kind of audit work we have to do. This is nothing but planning. Now, in documentation, we'll record everything. Whereas in the conduct of audit, we'll check about how auditor has to do the audit. And fourth is about knowledge of business. Now, all these three is not justifiable at all. Whereas in planning of audit, what do? We decide about our audit objectives and we will go for the available resources analysis, and based on that we will do the planning. So the answer will be option 101. I hope it is clear. Now moving on to next 21. The procedures followed by the cost auditor to reduce the audit risk to an acceptable level will not detect a misstatement that exists and that can be material is if there is a material risk and if it is not being detectable by the cost auditor. Then I have told there are three kinds of audit risk. One is inherent risk, one is control risk, and one is detection risk. What is inherent risk? If the controls are there and if controls are not proper, then it is inherent risk. If controls are there and because of controls are not proper, if the material misstatements are not being identifiable, then it is control risk. So there is a minute difference between inherent risk and control risk. See, inherent risk is suspectability of cost statements ascertained to material before considering controls, which means you haven't considered internal controls itself and doing the analysis of cost statements. Then it is inherent risk. After considering controls, you have got to know that internal controls are not proper so that they can detect about the material misstatements. Then it is control risk. Auditor has failed to detect about the material misstatements. Then it is called as detection risk. Now in this question, they have told us that cost auditor has failed to detect material misstatement that exists, which is called as detection risk. I hope it is clear. It is option B. Then CAS 104 enables the cost auditor to have knowledge of client's business. The answer is yes. Overall objectives of cost auditor and conduct of an audit. No, it is 103. Guide the members to prepare for audit documentation. It is 102. Making planning for audit of cost statements. It is 101. So the answer is option A. I hope it is clear. Then question number 23. A requirement of CAS 104. The cost auditor shall comply with relevant ethical requirements, have adequate level of understanding of the knowledge of business. The answer is option B, because 104 talks about to have knowledge of business and business environment. I hope it is clear. So nothing but the names, whatever are there, those are being tested in the MCQs. Cost auditing standard deals with what? Auditor's responsibility, auditor's power, right, flexibility. The answer is option A, auditor's responsibility. I hope it is clear. So these are the MCQs, simple MCQs. You just have to remember 101, 102, 103 and 104 headings. It is more than enough. I hope it is clear. So these are the MCQs of Unit 5. So let us start with the MCQs which are remaining for the other units of Section A cost audit. So I have compiled all the MCQs and given here. So let us start with the first MCQ. If the auditor is satisfied for all the points, then he will submit a report, which is called as what? So here for this, I want to give an explanation. Audit report can be given in different formats or different there are different types of audit reports which can be given. Okay, so if the auditor doesn't have any of the observations which should be given, nothing but all the entries which are made, all the information is true and fair, there isn't anything about the complaint, then they will give unqualified report. Now when they will give a qualified report, which means a cost auditor has come across any material which is misstated and the misstatements does not have a pervasive effect. What does it mean by pervasive effect? Which means material misstatement is there, but because of that material misstatement, entire cost statements are not wrong. Only a particular entry or only a particular product cost or that particular detail, whatever is that, that particular information is wrong. That doesn't mean that entire statements are wrong. It is not proving that entire statements are wrong, but yes, there is a material misstatement in it. And whenever the auditor wants to obtain an audit evidence for that, they are not being able to obtain an audit evidence. In that case, they will give a qualified audit report. In the same case, if there is a quite difference, material misstatement is there, and if there is a pervasive effect on key financial metrics, which means the key metrics because of which the decision will be taken, that itself is giving a wrong approach, which means there is a pervasive effect. The entire cost statements are turning to be wrong. If the decision has been taken by using this cost statements, the decision will be wrong. If that's the case, if the material misstatement is causing the entire cost statements to go wrong, then the cost auditor will give an adverse audit report. I hope it is clear. So if an auditor is satisfied for all the points, then he shall submit an unqualified report. Unqualified report will be given. I hope it is clear. Then XBRL. XBRL is there under Unit 8. XBRL form CRA 4, whatever the cost audit report is there, that should be filed in XBRL format. What is the XBRL? Extensible Business Reporting Language, and that language is based on XML family of languages. I hope it is clear. This you would have seen in other subjects and in your CMA Inter as well. XML family of languages. Then XML stands for what? Extensible Markup Language. XBRL, Extensible Business Reporting Language. XML, Extensible Markup Language. So extensible markup language, the answer is all of the above. I hope it is clear. Then question number 4. Which of the following is not an audit opinion? Audit opinion and audit report can be given either qualified, unqualified, adverse can be given, or it can be given as a disclaimer, which means if the cost auditor wants to give any observations, want to give any suggestions or opinion, then they can give it as a disclaimer opinion. What is not there? Reserved opinion is not there. Okay. Cost auditor can't tell that, okay, this might be right, this might be wrong. That kind of reservations are not possible in cost audit report. So reserved opinion cannot be given. I hope it is clear. So it is not a audit opinion. I hope it is clear. Then question number 5. During the planning stage of final audit, the auditor believes that the probability of giving an inappropriate audit opinion is too high. How should the auditor amend the audit plan to resolve this issue? Which means after getting into audit, the auditor has in the planning stage itself got to know that the probability of giving an inappropriate audit opinion, which means without proper information, if I would have give audit opinion, then there is a high risk of giving a wrong audit opinion on it. Now, how to avoid this audit opinion? Audit opinion can be based on 3 risks. We have seen that in cost auditing and assurance standards as well. What kind of risk can be there in audit? Inherent risk, control risk, detection risk. Now, inherent risk and control risk are based on the internal controls of organization. Cost auditor can't change anything for it. Those are related to the controls of organization. Those are related to the policies and procedures followed by organization. But if a cost auditor wants to change one thing, what they can change? They can change the detection risk. They have to be very much careful in doing the verification. So what they can do? Increase in materiality level? No. Decrease in inherent risk? They can't do that. Increase in inherent risk? No, that should not be done. Mostly the answer is decrease in detection risk. They can decrease the detection risk so that the probability of inappropriate opinion becomes less. I hope it is clear. Then question number 6. Arrange the following stages of audit of cost statements. So what is the audit of cost statements? So the audit can be done in 3 stages. One is planning stage. Cost audit can be done in 3 stages. One is planning stage, next is performing stage, and third is concluding and reporting stage. So there are 3 stages. Planning, performing, and reporting. So the answer is B, A, and C. It is given under option C. I hope it is clear. Now moving on to the next MCQ, verification of assets involves a critical examination of. Now how the valuation of assets has to be done? It's not verification, valuation of assets should be done. Verification of assets should be done based on the critical examination of ownership as well as existence. When you are doing the verification of assets, you have to check whether the asset is actually related to the organization, yes or no. Next, it is actually there in the company, yes or no. The physical existence, is it present or no? So ownership as well as existence both has to be examined. The answer is option B and C. I hope it is clear. Then moving on to next. Demerits of audit program. Now what does it mean by audit program? If you see, now this is cost audit program which we have for unit 6, and cost audit program if you take. Now, if you take the cost audit program, it tells about the entire planning of what should be done, how should be done, and what all analysis should be done in each and every element of cost element of organization. Like how the audit of production has to be done, how the audit of raw material cost has to be done, how the audit of electricity, how the audit of demineralized water cost, each and every element of it, how the audit has to be done. Regarding that, a proper planning and strategy, if it is given, then that is called as cost audit program. Now, it means it will be already determined in the prior stage of the audit itself. Now, what are the disadvantages of having that? Firstly, it is rigid. Now, if you see here itself, the points which are there, these are very much crucial points. Like each and everyone will not easily understand that, and calculating these also is not so easy. Like verifying this everything is also not so easy. So the entire cost audit program is very rigid. It is very tough. Whereas the second, ignoring new areas, the answer is yes. Cost audit program is already fixed. They do the audit about the production, they do the audit about the raw materials, they do the audit about the electricity, about the dematerial water cost, about the steam cost. It is already fixed. There could no be any changes. And the third, mechanized work, which means what should be done, how should be done, it is already fixed, and that you have to only follow it. You can't change anything. So that is called as cost audit program. So the answer could be all of the above. So the demerits of audit program will be rigid, ignoring new areas, and mechanized work. I hope it is clear. Then question number 9. Which of the following is not listed as a key task of audit personnel in planning a cost audit assignment? Which means whenever the planning is happening, which of the following is not a key task? Now, during planning, what do we actually do? Physical inspection of activities and areas where they are performed. Okay, we have to do that as a verification. Knowledge of key personnel responsible for the activities and maintenance of cost records. Yes, without knowing about who is maintaining cost records and how they are maintaining it, we can't go for the cost audit. Yes, it can be done. Study of statements of budgets, plans, strategies related to activities. Yes, we have to study about the organization. We have to study about the standards, budgets, strategies, everything. Internal control, we have to study about everything. So all these things will form part of the task related to the planning. Now last, preparation of company's financial statements for statutory auditor. In cost audit, why we have to prepare the records related to financial audit and that too related to statutory auditor? The answer is no. We will not even go for the financial statements preparation here. We are doing the verification of cost records. I hope it is clear. Then question number 10. Which of the following best describes an adverse audit report on cost accounting records and cost statements of the company? If means there is a material misstatement and that does has a pervasive effect. So we have to see that particular point. It confirms that the cost statements are free from material misstatements. The answer is no. There is a material misstatement. It indicates that the cost statements are materially misstated. Yes. Unreliable. The answer is yes. It is a pervasive effect. It tells the entire cost statements is wrong and do not conform to the generally accepted cost accounting principles. Option B sounds good. Then it suggests that the cost statements contain minor errors. No, it has a major error. Then only adverse audit report will be issued. It provides a clear opinion. The answer is no. So the answer is option B. I hope it is clear. Then moving on to next question number 11. Which of the following is least likely to be part of the cost audit program? Verification of cost records. Yes, we will do in the cost audit program. Checking compliance with the cost accounting standards, cost auditing standards. The answer is yes, or cost accounting standards. Cross verification of inventory valuation. Yes, that will be done. Calculation of EPS. Now, calculation of EPS is related to the other parts, but not related to the costing, not related to the production. It is related to finance. So calculation of EPS does not form part of cost audit program. I hope it is clear. Just a moment. Yes, the options which I have given the last is wrong. It is not option C, it is option D, calculation of EPS. I hope it is clear. So please correct it. It is calculation of EPS. This is the right answer. Then question number 12. Which of the following statements is true regarding the signature of cost audit report? Now, it must be signed only by a statutory auditor. Why statutory auditor will sign cost audit report? It is digitally signed by the cost auditor using DSE, digital signature. The answer is yes. It is signed in physical form only. No, it can be done through digital signature as well. It does not require signing. No, it has to be signed. Form CRA 4 cost audit report or Form CRA 3 cost audit report has to be signed by the cost auditor. It can be done in electronic mode as well using digital signature. So the answer would be option B. I hope it is clear. Then question number 13. Which of the following is not included in the cost audit report annexure? Value addition and distribution of earnings. Is it not there in the cost audit report? Related party transactions for cost records. Financial ratios and reconciliation. Directors remuneration details under schedule 5. Yes, director remuneration details will not be there in the cost audit report. Now, why director's remuneration should be there in the cost audit report? Cost audit report is related to the verification of cost records. So, related to value addition, distribution of earnings, related party transactions, financial ratios, reconciliation, regarding all these things, it will be there. But related to director's remuneration, it will not be there. These are like logical questions. I hope it is clear. Then question number 14. Which of the following particular relating to wages and salaries be included in the cost auditor's report to the directors of a company? Okay. Related to wages and salaries. Total wages and salaries paid? Yes. Total man days of direct labor available and actually worked? Yes. A brief explanation for variances in the item? The answer is yes. So the answer will be all of the above. All the related information related to wages and salaries should be included in the cost auditor's report. The answer is all of the above. Then moving on to the next, the responsibility to ensure timely filing of cost audit report with the central government lies with whom? With the management. Nothing but the board of directors. We can write like that. Now what is the options which are given? Form CRA 4 should be filed within 30 days from the receipt of the company with the central government, right? Now who has to file that? Cost auditor, he himself will file it. No, the company has to file it. Company secretary will file it. The answer is no. MD or whole-time director can be there. Board of directors or any other director has to file it. Audit committee, no. Audit committee will just say come, will give recommendations. That's it. So, among the given options, the answer is MD, managing director or whole-time director. I hope it is clear. So, the director has to file the cost audit report to the central government. Now moving on to next question number 16. If the cost auditor detects fraud during the preparation of cost audit report, what is the immediate responsibility which they have? File a police report. Why will cost auditor go for police report? Notify SEBI. Directly notifying SEBI. File ADT 2. Report to the board, then SEBI is if unaddressed. So if they have come across any of the if they come across fraudulent activity, section 143 subsection 12. If the cost auditor come across any fraud which is happening, then they have to report the fraud according to 143 subsection 12. This we have seen. And according to 143 subsection 12, what they have to do, they have to first report it to the board of directors or audit committee within 2 days from the knowledge. And if it is unaddressed, then they have to go for central government as well based on the limit. If it is more than 1 crore or less than 1 crore, based on that. I hope it is clear. Then moving on to next. Question number 17. If the auditor concludes that some audit evidence is insufficient, what should be done? Ignore if deadlines are tight? No. Seek additional evidence before forming an opinion? Yes. Qualify the cost statements without informing management? No, they have to inform the management. Submit a disclaimer of opinion immediately? No, disclaimer of opinion will be given based on the observations which they have. Now, if they have audit evidence and if the audit evidence is insufficient, what they have to do? They have to ask for the evidence. Seek additional evidence before forming an opinion. I hope it is clear. Then, question number 18. Incomplete documentation increases a risk of fraud going undetected, higher production cost, delayed turnover, no change in opinion. No. If incomplete documentation is there, then it will increase fraud going undetected. So, it will tells about the fraud. So, I hope it is clear. If the cost audit report is not so clear, then what can happen? Fraud can go undetected. Or if the cost records are not clear, then we might not know where the fraud is happening. So, the answer can be A. I hope it is clear. We are just choosing the best option from the 4 options which is given. Now, question number 19. Main purpose of evaluating internal control in cost audit. Why we are going for internal control in cost audit? To detect tax fraud, to reduce audit scope, to assess data reliability, verify shareholding pattern. Why we want to know about shareholding pattern in cost audit? Why we have to know about the tax fraud? Why we have to reduce the audit scope? We have to increase the audit scope, not reduce it. The answer is assess data reliability. The best option which is there. Now question number 20. Which audit procedure is performed during execution phase? So there are 3 phases. One is planning phase, execution phase, performing phase. Sorry, planning phase, performing phase and execution phase. So there are 3. First, there are three stages: planning, performing, and reporting. Audit process can be planning phase, performing phase, reporting phase. I hope it is clear. Okay, planning phase, performing phase, and reporting phase. Now here, which will come under the execution phase? Understanding the entity's cost structure, designing audit program, performing sampling and watching, assessing risk of misstatements. If you see, understanding about the entity will be done in the planning. Designing audit program will be done as a performing, or assessing risk of misstatements will be done in the planning stage itself. Now, what is execution? In the execution phase, we will actually perform sampling and vouching, which means we actually start the work. I hope it is clear. So, the answer will be option C. Then question number 21. First step in preparing audit program for the new client with decentralized operations. When we are going for preparing an audit program for the new client, then what is the first step? To verify financial ratios, to evaluate statutory audit, to understand cost system and operations, and to perform analytical procedures. It is your new client, which is first time you are going for that client. Then what you have to do? You have to understand about the cost system and operations about the organization. First, you have to know about the business. So that's the first major step which you will do. After that, you will go for knowing about the operations or knowing about the cost records. Okay. Now, directly will not go related to financials. We are going for cost audit. Then related to statutory audit, if required only will not directly go to it. I hope it is clear. The other three options are not so relevant for cost audit. Only this is relevant for cost audit. So you can tick that. Now, question number 22. What is the role of working papers in cost audit program? Now, there are working papers, audit notebook, audit working papers, and audit engagement letter. This is very important for you to remember. Okay. Now, what does it mean by role of working papers in cost audit program? It is an optional record shared with tax authorities, basis for opinion and future reference, discarded after report. So, majorly, audit working papers are the files which are maintained by the auditor, so that if they want to know about the future references or if they want to give it as an opinion, then this will act as an evidence for whatever the opinion they have given. So it is actually to give basis for the opinion and future reference. I hope it is clear. Not only audit working papers, also audit notebooks are also similar to like that as well. Okay, these are the papers which are prepared exclusively for cost audit purpose. It is for the cost auditor. Okay, it's not optional. In few cases, it is mandatory, like auditor has to maintain that as a documentation to give it as a proof of whatever the work they have done. Okay, I hope it is clear. And they can't discard after the entire report has been completed. They have to maintain it. And for the maintenance also, we have certain list, like based on the terms and conditions which they have, based on the company's policy and based on the cost auditor's policy. If they want to preserve it, they have to preserve it. I hope it is clear. Then question number 23. What would most likely modify a pre-approved cost audit program? Which means you already have created a cost audit program. Now, what can change it? Firstly, auditor's leave. If auditor is on leave, the entire cost audit program will change. The answer is no. If the auditor has left the organization, then the other auditor will come. That's it. Change in stock valuation method, increase in product price, change in marketing strategy. Now, if there is a change in stock valuation method, which means the entire valuation method itself is changed, which means the entire cost information will change. If entire cost information is changed, then the entire cost audit program also should be changed regarding the verification. I hope it is clear. So the answer is option B, change in stock valuation method. Then question number 24. Which of the following is least likely to be part of cost audit program? As this is also a repeated, the answer is calculation of EPS. Then cost audit is required to maintain working papers and audit documentation for the minimum of, as I've told you, they can't discard it. They have to maintain it for the minimum period, and the minimum period is 10 years. I hope it is clear. Then dash is a written plan containing details with regard to the conduct of particular audit. Audit notebook, audit program, audit files, audit plan. Now, audit program is a written plan containing details with regard to conduct of particular audit. How the audit has to be done? It has to be maintained as a separate written plan, which is actually called as audit program. I hope it is clear. Nothing but the entire written detailed plan of how the audit will be conducted. It is audit program. I hope it is clear. Then question number 27, XBRL, it is Extensible Business Reporting Language. Given in option A, Extensible Business Reporting Language. I hope it is clear. Then question number 28, dash means the material including working papers prepared by and for or obtained and retained by the cost auditor in connection with the performance of audit. What is called material including working papers, which means there is something which is inclusive of working papers prepared by or for the audit, and it has been done by the cost auditor when they are performing the audit. So, what inclusive of working papers? So, there is this which is called as audit documentation. Okay. So, audit file is also there. Audit file includes audit documentation. It includes audit working papers. It includes audit notebook. Everything if we have as a file, it is called as audit file. Okay. Audit documentation means the material including working papers prepared by and for or obtained and retained by the cost auditor in connection with the performance of audit. It is called as audit documentation. So, this is like an exact definition of audit documentation. I hope it is clear. Then question number 29. Which of the following is a prerequisite before filing the cost audit report and compliance report on MCA portal? What shall be done as the first? Validating the instance document. Yes, they have to do it. Pre-scrutinize of instance document. Yes, they have to do it. Use available tools to convert the instance document into a human readable PDF format. Yes, that is also. These are nothing but the steps which are given. But what is the primary step which they have to do? They have to validate the instance document. Now, if you see the entire process, first validation has to be done. Right. So, that is primary step among the steps which is given. This is nothing but the entire process of XBRL. Now, 30. Although XBRL can be applied to a very wide range of business applications, including financial and cost data, XBRL does not have application in which of the following areas? Reporting for internal and external purposes by the entity involving financial and costing data information, internal management reports and confidential internal communication, business reporting to all types of regulators, inclusive tax and financial authorities. Okay. So, XBRL can be used for what all? XBRL cannot be used for what? So, these are nothing but the uses of XBRL which is given. Okay. Can XBRL be used for reporting internal and external purposes? The answer is yes. Can they use it for the reporting to regulatory authorities, for tax authorities? The answer is yes. Can they use XBRL for reporting to government departments? The answer is yes. But is it just for internal management reports preparing? Do they use XBRL? No. XBRL is reporting, which means the official reporting which is being done. Now, management reports, confidential internal communications, for internal communications, XBRL need not be used. I hope it is clear. Okay. So, the answer will be option B. Majorly, XBRL is used for transferring the documents or for safeguarding the documents as an encryption, which means no one can hack it or no one can view it. The confidential information should not be leaked. For internal communications, they need not use XBRL. They can use any other cloud services. I hope it is clear. So, this is the MCQs which are there for Unit 6, 7 and 8. So, the entire MCQs, I hope I have given you the enough clarity along with the concepts we have discussed. This is more than enough for you to understanding what is the justification behind those MCQs. I hope it is clear so far. So, this is our entire section A cost audit MCQs.